US. Asia, though, responding a little more to Friday's nervousness and the higher energy price that we've seen coming through during Friday's session. So MSCI Asia Pacific down 0.9%. Japan, of course, taking a bit of a hit as a result of the higher oil prices. S&P futures, as we mentioned, though, showing that level of cautious optimism. Tom up 0.3%. This is the 30-year yield, so in keeping with stocks going higher, we're seeing bonds being sold and therefore yields going higher. And this is the Brent price, $90. So that just underlines how far we rose on Friday's session, Tom.
European futures pointed to gains of between 0.2% and 0.4%, with the biggest upside being flagged for the CAC 40. Over to you, Anna.
Okay, so the CAC 40 up 0.4%, expecting perhaps some gains coming through on the London market as well, given we have seen oil prices, even if they're off a little this morning, they're substantially higher than they were at the start of last week. Checking on the FX markets, given we're just seeing the opening of European trade, the euro is stronger, the pound is stronger, and the dollar index is a little off this morning. And that just speaks to, Tom, what you were saying about that slight little bit of risk on in markets today. But Mark gave us important context around that, suggesting, you know, we need to bear in mind just how risk averse investors were feeling at the end of last week, and the expectations going into the weekend were so dire as to what we might see on the ground. All of that said, there is room, it seems, for some of these currencies to rally against the US dollar in the very short term, waiting to see what happens in Gaza. This is the picture across European equity markets then. The FTSE 100 up by 0.3%. The French CAC 40 up 0.4%. The Italy FTSE MIB also up 0.4%. The sovereign bond story is pretty uniform then in the US and also here in Europe, but even more pronounced in the US at the long end of the curve once again. So we're seeing, if we do manage to put aside geopolitical concerns, even just for one morning here in Europe, then that leaves room for bonds to sell off and for the US 30-year yield to get back to rising, which is what we saw it do before these geopolitical tensions flared. So the 30-year yield at 4.8%, and European yields are broadly heading higher. A more mixed picture, though, when it comes to commodities. Tom, what do you see on sectors?
Yeah, high yields potentially capping any relief trade for technology, because tech shares were hit in Europe on Friday, and also a pretty decent sell-off, significant sell-off in the US as well around technology. Again, high yields maybe capping a bit of upside there, just gains of 0.1% across technology. Just one sector then in the red so far in the session this Monday, and that's utilities, down about 0.1%. Every other major sector in positive territory. Basic resources is standing out with gains of 1.3%. Energy is seeing some upside. The price rally, of course, around Brent and WTI last week, and of course the sensitivity to the geopolitics. Energy gaining 0.9% as a sector so far in the session. Retailers also posting gains of 0.5%. We continue to watch, of course, the banking sector. A big week, of course, on the earnings front out of the US. Goldman Sachs, for example, the Bank of America with earnings out later this week. Whether or not that is a bit of a tear, or at least a linkage into the banking system and the banking sector of Europe, is questionable, but nonetheless, you're seeing gains across that sector of 0.7%. So it's a positive picture across these sectors, again, with all the caveats around the geopolitics across the benchmark in Europe. Gains so far 0.3%, Anna.
Okay, let's get to some breaking news across the Bloomberg terminal then, Tom. A red headline says that KKR has made a binding offer for the Telecom Italia network. This had broadly been foreseen, but worth making a mention of this private equity bid then for telecoms infrastructure in Italy. KKR, we understood back at the end of last week that they were ready to submit this binding offer for Telecom Italia's phone network in what had promised to be a game-changing deal for the ex-monopolist looking to slash its massive debt pile. This was at the time, according to people familiar with the conversation, that was on Friday. Now we've got confirmation this morning of KKR making a binding offer a day later than it was expected, but still that news news coming through this morning. Let us get back to Sophia Horta-Acosta, who joins us from the Markets Today blog to take us through some of the thinking on the blogs this morning. So there's quite a lot to deal with this morning, Sophia. Then we've got, of course, the geopolitics front and centre for many investors, but we're trying to see what happens in amidst this sort of diplomatic flurry there. So in the meantime, time for other stories to surface, and one of those is around China once again. We've seen the medium-term loan facilities, some liquidity extended in China, also some geopolitical developments over the weekend. What's the latest news flow of note?
So the PBOC held interest rates. The 1 year is kind of the more policy-driven interest rate, added liquidity. So this really shows that policymakers are waiting to see whether the stimulus announced since August is feeding its way into the economy. Credit data last week suggested that it was, and it's not really cheaper funding that will help really invigorate economic activity. We will get data, the latest GDP and infrastructure investment data out of China on Wednesday. But essentially, the PBOC is doing what it can. Interest rates are already incredibly low, and supplying more credit at a cheaper level is not what would move the needle. More fiscal stimulus is needed. The other kind of key thing that I'm watching actually was on the stock market front. Regulators have actually made it harder for short selling. I think that's quite interesting because it's already quite hard to go short stocks on mainland indexes. And we're looking at this because it does suggest that after we did see the state fund buying up SOE stocks, namely bank stocks, now it's concerned that people will start betting against the market. So essentially, if you're a hedge fund, you need to put up 100% of margin to make that trade in, so making it essentially very difficult. So more support for the domestic mainland stock market as well.
Yeah, so looking at the stock market, the liquidity injection coming through from the PBOC, but as you say, the question as to whether or not there is actually that demand for more loans out of China. More broadly across these markets, Sophia, where's your focus?
I mean, as Anna was saying, there's a lot of noise right now. The geopolitical story, the sad geopolitical story, unfortunately, it's the one that's moving markets because it is the kind of unknown right now. We don't know where it's going. Everything will move on that. People are expressing their views via oil, via also the bond market. We're seeing treasuries. Volatility in treasuries is filtering through the rest of the bond market in the world. You're seeing them kind of sell off a little bit today, but it is the safe haven trade. It's kind of being almost in the middle of what will the Fed do, and that kind of safe haven trade as well. That will feed through to European bond markets and also currency markets as well. Let's see what the dollar does. If the dollar is a safe haven bid and moves the rest of the currency market, but then Fed officials kind of talk down the need for more hikes this year, then you're going to see volatility in the currency markets.
Seemingly taking a break from the safe haven trade today in terms of what's going on bond markets, but absolutely all focused still on that with uncertainty about what happens with any ground invasion. Moving away from the events in the Middle East, we have data to watch this week, and some of that comes from the UK. We heard Mark's thoughts on what's going on in the labour market earlier on. What's your focus?
Wage data. So that's tomorrow. I mean, this is kind of the hawkish number. People expect that to be still wage growth, still sticky. We don't get the kind of full picture unemployment tomorrow because the ONS has delayed that by a week, really complicating things for traders because they won't really know how to read it. But inflation on Wednesday, I'm coming in early for that on Wednesday, and this is really kind of the key guiding force for how traders will start to price in the next BOE hike or pause, or whether we've actually reached peak rates. That's what the market's thinking right now. But it might also be a reminder that inflation is still high in the UK. It's much higher than most developed economies, and there's still a lot of work to be done, which is something that Andrew Bailey flagged last week, that it's not a done deal on a pause. Okay,
and Hugh Bell as well, the chief economist of the Bank of England, speaking later today. Sophia Horta-Acosta with some of the key market themes for us today. You can get more, of course, of the analysis and the thoughts of Sophia and the rest of the team on the Markets Today blog on the front page of the Bloomberg UK website, or by typing TLIV GO on the terminal. Let's get a check now on some of the individual stocks on the move with Joe Easton. Joe standing by. Joe, what are you looking at?
So we got some huge moves over in Warsaw at the moment after that news of the opposition party potentially getting a majority at the weekend election, particularly in the banking stocks jumping. We've got Banka Polska up here, up around 10% at the moment, and also Polshena as well, up 7%. The Warsaw Index up the most in 18 months today, by far the best performing sector in terms of countries today in Europe. We've also got a couple of the other stocks affected, so the utility firm PGE and Dino Polska, the grocery company, both of those gaining as well. But we can see the banks really liking that election news at the weekend. Those are outperforming quite considerably. There's also some interesting rating moves today. Ocado, we've seen downgraded over at Barclays. They go underweight, and this isn't to do with their UK grocery business. This is all about the robotics business, and they say they're potentially going to start seeing some fading on some of their contracts and also some automation competition. So they obviously make automated warehouse. That's where the weakness is, according to Barclays. UBS upgraded over at RBC. They're joining the other brokers who think that the Credit Suisse deal will start to now benefit the firm in terms of their earnings. SSAB, this is the steel firm over in Stockholm, overweight at JP Morgan. That stock's sold off given the China worries, but is getting a buy rating over at JPM today. And then in UK water, these stocks were hit by the Thames Water debt issues. They've fallen off a cliff, but now Jefferies going overweight, a couple of them, including Severn Trent, and that one is rising in the UK this morning. Then just having a quick look at some of the other stocks we flagged in the stocks to watch segment. So AstraZeneca, potentially a bit of a read across coming from Pfizer, which downgraded its earnings guidance on Friday, the big COVID vaccine rival for them. Kion in Germany, this is the truck and industrial company, raised its guidance on Friday after the close as well. THG, we had the report in the Telegraph looking to potentially spin off and list their MyProtein business over in the US. That one's rising around 3.7%, and we're still waiting for a price. The producer telling me in my ear we're still waiting for that one to open. It is halted. There is renewed takeover interest from private equity, according to Reuters. We'll wait for a price on software one. That one's unchanged at the moment.
Thanks very much, Joe. Joe Easton from our equities team with an update for us. Coming up on the programme, we will get back to one of the stories Joe was talking about there, and that is around Poland. An exit poll suggests Poland's pro-EU opposition is on track for a majority, ending 8 years of rule by the Law and Justice Party. We will get the latest live from Warsaw next. This is Bloomberg.
Was the brainchild of Apollo CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
The top names in business are on Bloomberg.
The market is starting to look over the Fed's moves into falling interest rates.
We actually think that core inflation is going to fall a little faster than the Fed expects, and that will allow them to start cutting rates by March of next year.
You get a price spiral when labor markets are tight. In manufacturing, labor markets are still very tight right now in the US.
Nobody covers business like Bloomberg. Context changes everything.
Good morning, good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to the Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
This is markets today, 13 minutes into our European trading session this Monday. We see a little bit of divergence across European equity markets. Overall, though, the Stoxx 600 up by around 0.2%. We see basic resources as the best performing sector this morning. Energy also doing fairly well, not necessarily because of where commodities have gone this morning, but because of what we saw on Friday and an extension of concerns, geopolitical concerns perhaps, entering there and pushing some of those prices higher. That said, more broadly, we're seeing a little bit of relief in markets today, given the flurry of diplomatic activity happening over the weekend and the extent of negativity and caution that investors perhaps embraced on Friday as we headed into the weekend. So as we saw risk aversion on Friday, today we see room for a little bit of move higher in risk assets. So let's turn to another political story in Europe. Polish equities are some of the biggest gainers in today's session. That's after an election exit poll showing the country's pro-EU opposition is set for a majority, potentially ending 8 years outside the European mainstream. Bloomberg's Warsaw Bureau Chief Piotr Skolimowski joins us now with more on the story. And we've just had an update on what this is doing to markets. But before we get to that theme, Piotr, run us through the latest in the polling, what it means, and what it means politically for Poland and its relationship with the EU. Is Poland heading back to the EU mainstream?
Hi, Anna. So indeed, it's a massive upset for the ruling party, Law and Justice, that has been in power for 8 years. And now it seems like they're on course to be voted out, and the coalition of the pro-EU opposition parties, 3 opposition parties, is probably set to take power. It's not going to be an immediate effect. It will probably take weeks before we see the new government. But at this point, the markets are actually taking positively. The reasons are a few. First of all, the Civic Platform, the main opposition party under Donald Tusk, promises certain rapprochement with the EU. The EU has held 35 billion euros in EU funds from Poland because of the concerns over the rule of law. What Tusk plans to do first is make sure that this money starts flowing again. So that's what we're going to see probably in the next few weeks, a certain amount of rapprochement with Brussels. What we're also going to, I mean, what's interesting about the late poll that we just got is that the pro-EU opposition has obviously the majority. That's what the poll shows. But the turnout is also quite staggering. It's the highest Poland ever recorded in its history. It's actually higher than in the first partially free election in 1989 when Poland voted to end communism. So this sort of gives you the significance of the moment.
Yeah, turnout of more than 70% kind of pales into comparison. The UK, if you look at UK turnout for elections here, 70% is nowhere near what we get. So the context is important on that front, isn't it? Yes, a huge turnout in those elections. The market reaction then is here, and we're seeing it across the zloty, but also, of course, the equity markets of Poland. The equity markets there, the main index gaining a little over 3%. The zloty's up 1%. You mentioned that 35 billion. Look, it's not an insignificant amount of money. When does that come through? And how is that being factored into the kind of market reaction that we're seeing?
So obviously 35 billion euros is sort of is obviously a lot of money, but also is symbolic in a sense, because there were concerns growing before the election also that 35 billion that's been withheld is just the beginnings. As long as Law and Justice continues to stand up to the EU, and there are concerns about the rule of law, more money can actually end up being withheld. So there was some concern in the market, I suppose, about how the relationship will unfold going forward if the Law and Justice continues to rule and stays for the third term. Now it seems like those concerns have been dispelled by at least the exit poll. We still don't have the final results. But at this point, markets are probably taking it positively because it obviously means more money coming in, but also better relations with all the EU partners, which also include Germany, because the ruling party, the Law and Justice, has been also having a lot of there was a lot of controversy and a lot of arguments with Berlin, with France from time to time. So it's also a better mood in terms of better relations with EU partners, and that's also good for investments.
Okay, Piotr, thank you very much. Thanks for joining us with the update. Bloomberg's Piotr Skolomovsky. Here are some of the big events that we're watching out for this week. In terms of the data, of course, our focus very much on the geopolitics still in the Middle East. But in terms of the data and the sort of macro themes, this is what we're looking out for. 9:30 UK time. Later this morning, the Bank of England's chief economist, Hugh Pill, will speak on the economic outlook at the Official Monetary and Financial Institutions Forum. Meanwhile, US earnings season gets into full swing this week. We've seen some of the banks reporting already. More to come. We'll bring you all of the headlines. Tomorrow we'll get the US retail sales picture and UK labour market data. Some of it, as Sophia was saying, delayed until next week. On Wednesday, we will get UK inflation data for September, plus Chinese GDP figures. On Thursday, Fed Chair Jerome Powell speaks at the Economic Club of New York. We'll be also getting US existing home sales data that day. And on Friday, Japanese inflation data is due out. We'll also get UK retail sales. Could be a focus then on the BOJ later on in the week, Tom.
Okay, let's switch back then to the crisis in the Middle East. President Biden is said to be weighing a trip to Israel, adding to the US diplomatic push. Meanwhile, Israeli troops continue to amass near Gaza ahead of an expected ground offensive targeting Hamas militants. The United Nations says Gaza is facing, quote, an unprecedented humanitarian catastrophe after Israel ordered more than 1 million Palestinians, almost half the territory's population, to move south. For more, let's bring in Bloomberg's Oliver Crook in Tel Aviv on the ground for us. Oliver, take us through the latest developments then as the week starts.
So as you say, Tom, we're just awaiting what now seems like an inevitable ground invasion within Gaza. We've heard from the IDF over the weekend, the Israeli Defense Forces, saying that the next component of this military action will involve the air, the sea, and the land. So that is sort of confirmation of what we have been expecting for some time. The focus now seems to be on aerial bombardment and also evacuating the north of Gaza. There's been an evacuation corridor established again today, the third day that has happened. Today it's from 8 a.m. till noon, basically saying that they will not bomb a certain area of the sort of main arteries of the roads so that civilians can get south, which is something that many of the aid agencies is basically an impossibility in terms of moving that number of people without, sort of unimaginable human toll. We already have 2,600 dead, according to the Palestinian authorities, 1,400 dead Israelis from the attack just over a week ago. And again, the problem in Gaza here is that there is no aid getting in. It is very challenging from a perspective of water and electricity. And the focus here is also now more and more towards the north, where we've seen more fighting on the border with Lebanon, where there have been some deaths and rockets fired. The United States has sent a second carrier group, aircraft carriers, to the East Mediterranean, again, with a focus on deterrence and not trying to have the situation spill over any further than it already has.
Yes, and let's talk about some of the diplomatic action that's been taking place over the weekend. U.S. Secretary of State Antony Blinken, then, Oliver, is back in Tel Aviv, we understand, today, after a trip across the Middle East. And in fact, we're seeing increasing numbers of European leaders and talk of whether the president arrives. I mean, with all of this diplomacy still taking place, you wonder what is actually likely in terms of ground operations.
Yeah, it's very unclear, and the fact that Blinken began in Jordan, Tel Aviv, he went to Bahrain, the Emirates, Saudi Arabia, Cairo, and now back to Israel really demonstrates the complexity of the situation that is in front of the entire world, but really for the United States, who on the one hand is giving its complete support to Israel, but on the other is cognizant of all of the political realities within the region. There's really three things he's focusing on. The first is going to be to diminish escalation. The second is a question of aid to Gaza, and the third is to deal with the hostages. We don't have a lot of clarity on the conversations regarding hostages. There's a lot of back-channeling going on. That much we know. In terms of aid, we may be getting an opening of the southern border of Gaza into Egypt in terms of letting aid in and getting foreigners out. But also we've heard from the Egyptian ministries that they're preparing their hospitals for a possible influx of Gazans. And then the question of escalation is really two-sided. On the one hand, trying to talk to Hezbollah and Iran through the back channels there to prevent them from sort of launching a more vigorous attack in the north. And then the other is the discussions with Israeli leadership about how they go about taking out Hamas and the consequences around that. And that is really the Secretary of State's task today as he comes back to Israel to talk to leadership.
Oliver, thanks very much. Bloomberg's Oliver Crook in Tel Aviv with the latest. This is Bloomberg.
used to have a data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had never used a phone. They'd never heard it ringing. Today, 75% of the African people have a mobile phone. They use one, okay? And we will do the same with the internet in the next 5 years. You know, we will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support, because we are the best investment cases for this in the world.
The top names in business are on Bloomberg.
I see a world where financial conditions have gotten tighter, and the transition mechanism, which the Fed would like to see in slowing down the economy, which we all expected, it's taken a lot longer. So the real impact of higher costs around the globe, in the U.S. and Western Europe, it's not been felt yet. And so when people say, well, we're going to have a soft landing, I'm skeptical.
Nobody covers business like Bloomberg. Context changes everything.
Welcome back to Bank Earnings Now. JP Morgan has posted another quarter of record net interest income and boosted its forecast for the year. However, CEO Jamie Dimon warns the economic outlook is getting cloudier, especially given rising geopolitical risks. Let's dig into the US bank earnings now with Bloomberg's Charlie Wells. Charlie, what stood out to you then from Friday's report, and what are you looking ahead to?
I mean, look, we're about halfway through now, and we had JP Morgan, Wells Fargo, and Citigroup all reporting on Friday. We've got Goldman Sachs, we've got Morgan Stanley, and we've got Bank of America coming ahead. And what we saw on Friday was actually a lot more positive than people had been expecting. We saw a boost in net interest income at Wells Fargo and JP Morgan. Citi traders, some of those traders at Citigroup, actually had their best third quarter in at least 8 years. But the banks coming up have more exposure to investment banking, and we've seen, a boost in equities underwriting. We're expecting to see, some positivity there, but, we don't know because these banks are very different. There has been softness in that M&A activity, and Bank of America as well also has exposure to long-dated treasuries.
Charlie, thank you very much. Bloomberg's Charlie Wells with an update on the financial services sector. When we come back, we will talk about geopolitics. President Biden is said to be weighing a trip to Israel in the coming days. We will get some analysis on the latest in the Israel-Hamas war. That's coming up next. This is Bloomberg.
Venture capital, it's been volatile. From bank crisis anxiety to AI exuberance, Caroline Hyde and Ed Ludlow chat with the biggest names about the latest tech trends.
Is AI going to dominate the earnings narrative for this sector this week?
I think we're seeing opportunity and potential platform shift that we haven't seen in a long time.
If you're a company today and you're not embracing the changes that are taking place with AI, you're going to be behind.
How do you prove to the investor base that you haven't just tacked on AI to make yourself sexy?
It's very hard to differentiate if you're not experienced with AI.
The startup stories.
We think this is a watershed moment for technology.
Certain categories are more exciting than others. Right now, obviously, generative AI is a category that is very exciting to startup founders, customers, and venture capitalists as well.
So what we are seeing is a new area of opportunities for new founders to come and change the industries that matter.
And the real talk on realistic valuations.
Some of the best opportunities are sitting right in front of us.
How do you discern which ones are good on the marketplace right now?
I think founders have woken up to the reality that taking on more money at higher terms doesn't necessarily play to their benefit in the long run.
How do you actually invest?
Follow the VC money on Bloomberg Technology, the only daily business show dedicated to tech right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television. This month, Bloomberg brings you the latest from China's 14th Annual National People's Congress, including China's COVID recovery, economic outlook, and geopolitical tensions. Continuing coverage this week on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 1 p.m. Eastern, right here on Bloomberg, your global business authority.
This is Markets Today, 30 minutes into the European trading day. Here are your top stories. President Biden may visit Israel in the coming days alongside Secretary of State Antony Blinken, who met with Arab leaders over the weekend. Gaza continues to brace for a ground offensive. The U.S. says it's held back channel talks with Iran, warning against escalating the Israel-Hamas conflict. Egyptian President Sisi says Israel's response exceeds self-defense, calling for more aid for Gaza. And Poland's opposition looks to be on track for a majority, an election upset that could end 8 years outside the European mainstream. So half an hour then, Tom, into the European trading session for today, for this week. And we're seeing a lot of diplomacy, a lot of toing and froing of US diplomats and others from Europe coming into the region, the possibility of President Biden visiting. It seems the more we talk about that talk and the less we see actual ground offensive happening, it leaves a little bit of room for risk assets to rally in the very short term, at least.
Passing, of course, those diplomatic moves, the geopolitical evolution that's happening on the ground, of course, the tragedy, of course, remains front and centre. But it is also a market that is potentially looking ahead to the data and the earnings picture out the US, the UK, the European Union as well later this week. But for now, it is front and centre, of course, all about the geopolitics and how that story evolves, of course, with the risk around escalation. And as those risks ebb and flow, that adjustment is being felt across these markets. So you're seeing very modest gains across the benchmark here in Europe of just 0.1%. The DAX in Germany is essentially flat. And here in the UK, the FTSE 100 is above 6,000 to 7,600, adding 11 points, just a modest gain, about 0.1%. Part of that would be down to basic resources and energy and the little support that's coming through for the FTSE 100. Let's have a look at the sectors then and see how the sector picture is shaping up, because at the start of the session it was green across the screen, across all of these major sectors. That has become a little bit more nuanced now. Autos is down 0.2, utilities is taking a hit of about 0.6%, and industrials are flat. Tech also now lower by 0.2%. Across the main gainers in your sectors, energy is up 0.7%. You saw that big run-up, of course, in terms of Brent and WTI last week as a result of the geopolitical risks, and that is feeding into further support for the energy sector, 0.7%. Basic resources also gaining a full percentage point, a bit of liquidity being pumped into the system in China. Travel and leisure gaining 0.3%. Across your benchmark then, just very, very modest gains of 0.1% as we look for a little bit more certainty on the geopolitics. Again, data out of the UK, out of the US, and the earnings picture as well, with the banks front and centre come Wednesday, Anna.
Tom, let's get back to the geopolitical main story this morning. Sources have told Bloomberg President Biden may visit Israel soon, adding to the diplomatic push to stop the war with Hamas from engulfing the whole region. Meanwhile, Israeli troops continue to gather near the Gaza border ahead of an expected ground invasion, which risks drawing Iran, a supporter of Hamas, into the conflict. Joining us now is Laura James, Deputy Director and Senior Analyst covering the Middle East at Oxford Analytica. Very nice to speak to you, Laura. And I wonder what you make of news that President Biden might visit, because we see these reports that President Biden might visit. Antony Blinken continues his visit to the region. It is back in Israel today. We understand from German media that the German Chancellor might be in Israel on Tuesday. How does all of this weigh into your assessment of how likely a ground invasion is? And that's not to downplay the loss of life we've already seen, of course, in Gaza over the last 7 days.
I think that a ground offensive is still very likely indeed. It's not at all clear how Israel can achieve any of its stated policies with regard to Hamas, which President Biden explicitly supports, that this is time to wipe out Hamas as an organization. I'm not saying that is achievable, but that is the official policy of both Israel and the United States. So I think that the ground offensive is certainly going to happen. Biden's visit is very indicative, firstly, that the United States is putting a very high priority on this issue. And secondly, that US assessments of the risks of escalation may have gone down. Otherwise, Biden wouldn't risk a regional visit.
That's interesting, Laura. So it is your expectation that that ground offensive will continue, or indeed, I should say, will go ahead. What is your level of confidence that the diplomacy that is being pursued by Antony Blinken over the last few days will be successful in containing at least the conflict to that geography, with all the humanitarian crisis that would involve, that it wouldn't spread beyond that region, that essentially they can keep Iran at bay?
This is still very much up in the air, in my view. A lot of the diplomacy has been centered on the pure humanitarian issue, opening the Rafah border crossing, trying to get certain people out, trying to get some aid in, trying to get humanitarian corridors. So to sort of mitigate the impact of the offensive on civilians, that is much more diplomacy directed at the Arab Gulf states in the region, for example. That's not going to be a major determining factor for Iran and Lebanon's Hezbollah, which are the two main actors that will decide whether there's a further escalation. And I think that for both of those, there is still a very open calculation. On the one hand, they both have strong interests in containing the escalation, Iran even more so than Hezbollah. They're not at this point ready for a widespread regional conflagration in which they would be very much at a disadvantage, especially with the United States having expressed its clear intention to back Israel. But on the other hand, there is a real risk here for them of making a long-term strategic loss, of losing the Hamas front against Israel and all the leverage that offers. And particularly for Lebanese Hezbollah, there's a real risk of a loss of legitimacy in terms of it defining itself as an organization that is for resistance against Israel. And if it doesn't intervene at this juncture, when Israel looks relatively weak, when the humanitarian imperative is coming through on supporters' television screens, then Israel's legitimacy among a certain, Hezbollah's legitimacy among a certain set of supporters will decline. So it's going to be a difficult calculation. It's still open. I would say that the risks of escalation are not our central scenario, but they are a significant possibility that would be extremely high impact.
And what do you expect, Laura, from other important players in the region? I'm thinking here about Egypt. We saw an interesting headline across the Bloomberg earlier this morning that said that Egypt has put its hospitals on alert to cope with the Gaza crisis, which is sad and interesting in the sense of what happens to the Rafah crossing. But what role do you see Egypt playing here, either with regards to that crossing, the calls for aid that have been made by many visiting the region, or indeed from the region?
Egypt is in a very difficult position. It's trying to balance its important US alliance with the absolute need to show solidarity with the Palestinians, but the overriding strategic imperative not to have a mass movement of 2 million Palestinians into the Sinai Peninsula, which belongs to Egypt. And they're very much afraid of that as the outcome. And in that respect, Egypt will try and bring aid in, but is not going to allow mass movements out. I think the hospitals will take emergency cases, possibly. That would be an important consideration, but they cannot allow the Gaza problem to be solved by the Palestinians moving to Sinai.
Laura, how do the Gulf states fit into this equation? Which of the Gulf states would you be focused on most acutely right now in terms of maybe bringing leverage to play or being a key actor in this evolving crisis?
I think Saudi Arabia is certainly the most important actor, but I don't think they have very much leverage with anyone. They certainly don't have leverage with Hamas. Qatar has a very little, but only as an interlocutor, as a mediator to talk about, say, prisoner exchanges when Hamas is ready. Saudi Arabia has almost no leverage in terms of the bigger strategic assessment. They just have to sit here and hope that this doesn't spread.
Can I ask a longer-term question, Laura? And it's obviously far too early to be asking it, but given that President Biden was talking about it over the weekend, he was talking about how he doesn't see Israel governing Gaza long-term, that a Palestinian Authority should be doing that. Is there any possibility that we return to conversations in all seriousness about a two-state solution? There are many countries that express support for that view, but plenty of dissent as well.
I think that has got to be the official policy for the United States. Trying to put forward any other policy would be impossible, but it looks less and less realistic by the minute. It's, since the Oslo Accords, it's become increasingly less realistic because of the situation on the ground in the West Bank. Hamas's move here has deeply weakened the Palestinian Authority, which was already in some respects on its last legs. If the Palestinian Authority gets put in as an authority over Gaza after a ground invasion, its legitimacy will be nil. And it's not at all clear who would be put in, since the Palestinian president is old and ill and is not expected to live forever. And he has no clear successor, certainly not one with popular legitimacy. We are looking at a new kind of insurgency coming up in the Palestinian territories that we haven't seen if people try and manipulate this situation. Now, I think that is probably still going to happen because there isn't an alternative credible policy that meets Western countries' values, but it's not going to lead to a stable two-state solution.
Laura, do we need to widen the lens on this and look to other players in other parts of the world in terms of their potential influence that can come to bear, whether it's China or Latin American states or African states? Is there anything there that could change the equation?
I think that none of these states, particularly China, want the Middle East to explode. Obviously for China, energy imports are absolutely crucial. And if we really had a proper regional war, and I'm talking here about an escalation in Lebanon that brings in a US response and means that there is fighting with Iran and that the Straits of Hormuz are no longer safe, that kind of doomsday scenario. In that sense, China would have a major problem. I think at the moment, though, most of these actors are watching and waiting. They're encouraging de-escalation. They're expressing support for humanitarian issues. But again, there is very little leverage to be had. Nobody has much leverage with Hamas, and it's not clear what Hamas could concede to stop an Israel ground invasion apart from ending its own existence and handing its people over. Equally, Israel domestically has an absolute need to go in to show that it has done something serious to deal with this absolutely traumatic event that has changed its conception of its national identity. I don't think that's putting it too strongly.
Yeah, indeed. And it sounds like a lot of this then comes back down to the calculations ultimately coming from Tehran as well, as we look to the days ahead. Laura James, really important insights. Thank you, Deputy Director and Senior Analyst at Oxford Analytica. We appreciate your insights. Coming up, the US is said to be planning to further tighten curbs on China's access to advanced semiconductors and chip-making gear. We get the details. This is Bloomberg.
Race relations in the United States are much better than when you were growing up in Mississippi, or do you think we've made less progress than you think we should have made?
Both. I think that much better than when I was growing up. There's so many people who occupy areas and I never thought I would see them in. But I would have hoped it would be better. It's been a lot of progress. And somehow we're in an era now where, in spite of the progress, race relations in certain areas has become very scary. You know, some of the things that one reads about now remind me of growing up in Mississippi.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
This is Markets Today. We're 44 minutes into our European trading day for this Monday morning, and early gains actually fading as we see US futures dropping back towards the flat line. There had been some room for a little bit of optimism given all the diplomacy taking place in the Middle East. Maybe that would prevent further escalation, but that optimism seems to be short-lived, and US futures point higher, but only by 0.1%. European stocks then in the red this morning. Now, the US is said to be planning to further tighten measures restricting Beijing's access to advanced semiconductors and chip-making gear. For more, let's bring in Bloomberg's Jill Decius, who's in Hong Kong. Jill, good morning. Do US officials then see loopholes from the sanctions that they announced last year? Why is there space to take this further?
Hey, Anna. Yes, I think that it's really important to remember that this report comes in light of just a few weeks ago, we saw, Huawei release a brand new phone, that Mate 60 Pro, that kind of showed, given our teardown of that phone, that company, which we know has been battered with U.S. sanctions over the last several years, was able to develop this really, really advanced sort of high-tech technology, that some of the product was developed by a Chinese chip maker that suggested that China still has access to more advanced technologies than the U.S. actually intended it to when it's been rolling out some of these restrictions. We also know that those restrictions that were announced last year came without real support from key allies of the U.S., including Japan and the Netherlands. I think that that's just really important context to remember here as you look at what it seems the U.S. is going to do. Obviously, we're still awaiting more information. This hasn't been formally announced, although we believe it's going to happen fairly soon. But essentially what the U.S. wants to do is ensure that certain graphics chips are not given to Chinese companies for the purposes of artificial intelligence in particular. They also want to shore up some export rules that they believe some Chinese companies have been sort of circumventing by routing things and picking things up through other countries. And then there's also, I think, some language in there that would ultimately kind of make sure that certain overseas companies would have to get certain approval to give certain products to Chinese companies. So the idea here essentially is to limit China's chip-making ambitions, a lot of their advanced technologies in a way that we haven't really seen the U.S. be able to fully accomplish.
Jill, you referenced the action, of course, of October and the fact that this is fine-tuning. And the action of October last year was hugely significant, of course, and some described it even as kind of US launching some kind of economic war against China, given the restrictions on tech around chips and semiconductors. Is this just fine-tuning then, or is it more consequential? And what are we looking for next in terms of potential next steps from Washington?
Sure, Tom. I think that at this point, maybe a bit of it is fine-tuning, but, as we were just talking about, I think that Huawei, that new phone, that idea that they have access to, more advanced technologies or the ability to create something that feels more competitive with products that we didn't think they'd maybe be able to compete with does illustrate that, the U.S. sees at least some serious loopholes or some needs to kind of restrict things here. I think that, though, that what's important to remember is that the U.S. has gotten pushback on those export controls from some companies that have really resisted that. Obviously, there's been some talk about whether some of its allies would buy into this. I think at this point, we'll have to see what the U.S. government ultimately unveils, how exactly they respond maybe to, this idea that they're tightening things up too much. It's a really, really difficult line, I think, that Washington has to walk as they go forward with this.
Okay, Jill Deesis in Hong Kong with the latest in terms of the US refining some of these restrictions on chip technology for China. Thank you. Let's get to some of the other top stories on the Bloomberg terminal today then. New Zealand's voters have picked a centre-right government to manage the mounting economic challenges in the aftermath of the pandemic. Coalition talks have begun, with Christopher Luxon set to become the nation's new Prime Minister after his National Party won the lion's share of the vote in Saturday's election. Meanwhile, in Ecuador, the heir to a fruit exporting dynasty will become the country's next president, with 35-year-old Daniel Noboa beating his socialist opponent in a runoff vote. The election was Ecuador's bloodiest in living memory, after one candidate was gunned down while campaigning. Noboa faces a country besieged by powerful cocaine cartels and struggling to service its debt. And in corporate news, Citigroup has trimmed headcount by another 2,000 jobs in the third quarter, bringing the firm's total severance charges for the year to $650 million. On a call with analysts, the US bank said it's cut about 7,000 positions so far this year. Their layoff charges recorded so far don't yet encapsulate the reorganization that Citigroup announced last month.
Coming up on the programme, we take a look at some of the stories driving today's European equity session and other assets on the move. Eddie van der Veld joins us from our Markets Live team. This is Bloomberg.
Crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you've got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
Slice through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal.
Now, more to the point.
What is the lesson or the observation?
Markets today, 52 minutes into our European trading day, and early gains fading in most of these markets. Tom, you've got a morning must-read for us.
Well, across your markets, one of the stories of the day is the liquidity injection coming through from the PBOC, sizable over in China. But as we've been discussing, the demand for loans isn't really picking up substantially. And of course, all of that ties back to the weakness in the real estate sector. So the must-read of the day is an unpacking of some of the consequences, the ripple effects, by Xu Li Ren, who's always excellent on the story of China. The quote coming through from this story then: globally, as commercial real estate wobbles, investors are starting to worry about private equity. and that is very much the case in China. And she talks about just one example, Ping An Real Estate, which is a subsidiary of the giant financial firm Ping An, which is an insurance, largely insurance business, but also has a major stake in HSBC as well. And she says what Ping An Real Estate has been doing over the recent years, along with many private equity firms in China, is taking stakes in real estate assets, and that is coming back to haunt them. They've seen yields shooting up by about 30%. They've got debt that they can't manage, so a debt pile where they have about enough cash to probably pay off about half of it. So the question is, do they get bailed out? Do they get bailed out by the parent company? Or does Ping An and do other businesses that oversee some of these subsidiaries just let this burn? And if that happens, the consequences then for the Chinese economy, indeed the global economy. So Xu Ren just putting the spotlight on the fallout within PE, within private equity in China, and that linkage to real estate, Anna.
Okay, let's talk about what's happening in these markets. Eddie Van der Veld joins us from our Markets Live team. And Eddie, there are things to talk about when it comes to China, and Tom just set us up with that. But I wanted to focus on the geopolitical themes to start with. We're witnessing, the terrible things, terrible scenes that we've seen over weeks it taking place in Israel, in Gaza. Geopolitical tension then certainly to the fore at the end of last week. We thought perhaps it was just fading a little this morning, but now we're flat on US futures and European stocks.
Yeah, so the commodity markets were definitely much more of an epicenter for even the activity late on Friday. And I think, there was a lot of people that were just de-risking, saying going into the weekend, there's a lot of opportunity for escalation and not a lot of places to trade it. So people were taking some money off the table. And we're seeing that come back a little bit. We're seeing gold come back a little bit. Oil, no longer as uppish as it was on Friday, certainly. So we're seeing a little bit of, just putting some of that risk back that people took off the table on Friday.
What is your assessment of the measures coming through, the reported measures in terms of the tweaking, the fine-tuning of some of these chip restrictions from the US, the geopolitics between Washington and Beijing, as we know both sides seem to be edging closer, maybe, to a meeting between the two presidents later this year?
You know what? I think there's a real chance that this comes back to the agenda with on a big scale, because, as we approach a US election next year, we're still a year out, but, I think both the Democrats and the Republicans have found that, upping the rhetoric against China tends to be a vote winner. So I think that this is something that's going to come back to us as we move into next year. For the moment, it seems that, both parts, China and the US, they ramp up the rhetoric, but in sort of slow phases. But it is one that the market is not really focused on and probably should be.
And Eddie, just briefly, the China liquidity moves, anything to see there, or is that just sort of market plumbing that we don't need to be too aware of?
Look, I think China is looking for ways to stimulate its economy and stimulate growth and share prices and so on without delivering a big package. And I think that's what we're seeing here. They are just trying to keep things going, trying to stave off deflation without any major moves.
Okay, Eddie Van der Veld from our Markets Live team walking through some of the key market themes for us today. Remember, you can get up-to-date analysis from Eddie and the rest of the team. Just go to MLIV, go on your terminal. European futures down 0.2%. US futures, S&P E-minis are flat. Nasdaq futures down about 0.1%. That is it for markets today. Stay with us, though. More coverage up next. This is Bloomberg.
I was putting so much pressure on myself. And when I changed my mindset midway through the tournament and just approached it one game at a time.
Lloyd with Morgan streaking. She's chipping the goalkeeper! Off the post and in! Hat trick for Lloyd!
I went from really just being under the radar to suddenly being in the spotlight.
You know who I'm talking about, Carly Lloyd. Carly Lloyd! Ladies and gentlemen, we have an American hero.
I had speaking engagements, sponsors that wanted to sign me, appearances, you name it, I had it. It became very mentally draining for the next easily couple years because I was extremely busy. But I knew that if I'm going to have any type of retirement, any type of financial stability when I'm done playing, I had to take every advantage of my opportunity.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
And market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter. Here's what's coming up on today's program. President Biden is said to be weighing a trip to Israel as Secretary of State Antony Blinken returns for more talks as the U.S. tries to contain the war between Israel and Hamas, while Gaza continues to brace for a ground offensive amid a humanitarian crisis. Diplomatic efforts to contain the conflict are steadying markets with European stocks flat, U.S. futures edging a little bit higher, and oil slipping after surging almost 6% on Friday. Plus, Polish stocks rally with the country's opposition on course for a majority after Sunday's election. Now, the results, of course, denying the ruling nationalists a third term, steering the country back into the European mainstream. Now, let's take a look at the European markets map. We gave you a nice snapshot of exactly what's going on into some of these equities. We're seeing a bit of fluctuation, actually, when it comes to some of these European stocks. Again, the Treasury is actually dropping, traders trying to track efforts, really, by the U.S. and its allies to try and prevent a further escalation in the Israel-Hamas conflict. Now, it's all playing out with the price of oil. That's probably the most important proxy when it comes to a conflict possibly widening. Now, oil prices trading in a pretty narrow range, so they've held up consistently as U.S. officials, again, are trying to rush to speak to Middle Eastern nations, including back-channel talks with Iran. If something were to escalate, you'd probably also see it here. This is a two-day chart. You can see 5.3%. When I was in Marrakesh talking about these IMF meetings, a lot of the focus on the fact that the price of oil, despite everything that was going on, had held up and not shot up by $10 to $15. Now, President Biden is, we understand, said to be weighing a trip to Israel, adding to the U.S. diplomatic push. Meanwhile, Israel troops continue to amass near Gaza ahead of an expected ground offensive targeting Hamas militants. Now, the UN says Gaza is facing an unprecedented humanitarian catastrophe after Israel ordered more than 1 million Palestinians, almost half of the territory's population, to move south. Now, Biden has warned against Israeli occupation of Gaza and said U.S. troops do not need to be deployed on the ground.
Can you foresee U.S. troops in combat in this new Middle East war?
I don't think that's necessary. Israel has one of the finest fighting forces in the country. I guarantee we're going to provide them everything they need.
Well, let's bring in Bloomberg's Oliver Crook, who's in Tel Aviv, as well as Bloomberg's Roz Matheson. So thank you both for joining us. Oliver, what's the latest, actually, on the expected Israeli ground offensive?
So, Francine, we have, as we know, hundreds of thousands of troops that are sort of standing ready at the Gazan border in the south here of Israel. There's an evacuation corridor in effect today, as there was on Saturday and Sunday, from 8 a.m. until about an hour from now, which is basically the Israelis saying that they will not bomb the key arteries for the civilians to move from the north of Gaza down through the south. A task which many of the aid organizations say is completely impossible without great human suffering. We're talking about the displacement of about more than 1 million people, and this, according to some estimates from the Israelis, 500,000 to 600,000 have already moved, and that's as 2,600 are dead, according to the Palestinian figures, and 1,400 Israelis dead, mostly killed on that Saturday just over a week ago. And the issue in Gaza right now is the inability to get aid in, which is one of the main issues on the deterioration on the ground. No water and electricity, which are in very limited supply. The focus, though, has also moved to the north, where there have been more skirmishes on the border with Lebanon. We also understand that the Israelis are evacuating the Israelis that are 2 kilometers off of the Lebanese border. And that comes again. We also had some diplomatics here yesterday. We had some of the senators, Chuck Schumer, Mitt Romney, among 5 of lawmakers that were here in Tel Aviv to give a press conference giving their full support to Israel, a press conference that was delayed by air raid sirens.
Roz, we understand, of course, that Secretary Blinken has returned to Tel Aviv in a bid to contain the war. There's also talk of President Biden arriving in Israel. Does that change anything?
Well, obviously, you can see just the diplomatic frenzy that's going on. There's also talk the German Chancellor, Olaf Scholz, may try and get there as soon as tomorrow also. So a series of very high-level visits potentially, and that's all about doing several things. One is potentially simply to try and deter a full-scale ground war inside Gaza. The more senior officials are there, the longer that might take. It's also to up that diplomacy in the region and trying to urge actors like Iran, obviously, not to escalate in the event of a ground war. You just heard about the skirmishes that are happening in the north of Israel with Hezbollah, which is backed by Iran. Real concern if there's a full-scale ground war inside Gaza, that will just pull Iran in. And then you've got a regional conflict.
Yeah, and Ollie, so we know that the U.S. Secretary of State did stops in Jordan, Bahrain, Qatar, Egypt, Saudi Arabia, and the United Arab Emirates. Do we know how those went?
So what Blinken has said is that a lot of the talks were very productive, particularly with the Crown Prince Mohammed bin Salman. We do not have a huge amount of detail in terms of the sort of concrete outcomes from there, but we know that the focus was on 3 things. Was 1, reducing the sort of possibility of escalation and spillover. 2 was aid, and then the 3rd was the hostage situation. On the hostage negotiations, obviously all of that is kept very, very quiet. We understand there's a lot of back channeling going on. On aid, there may have been some progress made on the Rafah entry point to Gaza, which is on the southern border of Gaza into Egypt. There may be aid that be able to eventually come through there, and also foreigners that can come out. And we also understand from some of the Egyptian ministries that they're preparing for an influx in their hospitals of Gazans potentially. And then the question of escalation really is two-sided, and it's a really challenging one for Blinken. On the one hand, trying to talk down Iran and trying to back channel with these sort of Arab leaders, but then also on the other, trying to give the full support to Israel while at the same time cognizant that how Israel goes about chasing after Hamas and trying to dismantle Hamas is going to have a huge impact. We saw countless protests of thousands and thousands of people across the Arab world and even, across the world entirely. And this is something, the political reality that the Israelis need to be very conscious of, and certainly that the United States needs to convey in some way to the Israel leadership.
Yeah, and Roz, at the same time, as Ollie was just mentioning, there are increasing attacks from Hezbollah on Israel's northern border. So what's the right way? Do we know? Do we have any insight into some of these back channels between the U.S. and Iran? What could have been said and what could have been agreed?
It's just very interesting the U.S. has publicized these back channels. These are things that generally do not get talked about in a public forum, and very much, again, reflects that growing sense of, like, where are we headed with all of this? But what we can see is the messaging to Iran from the U.S., from others, which is like, we very much do not want this spiraling outward. Israel would not go into Gaza to occupy it, to stay there. They would go in to try and destroy Hamas and then leave again, and very much try and keep it contained. Because you can see the rhetoric from Iran, it's rising also, and from countries like Egypt in all of this. So you've got a very heated environment. Iran is saying, well, hang on, if you do this, we might be compelled to do that. Do they do that directly? Do they do it through proxies, again, through Hezbollah? Either way, it's going to get very, very messy, potentially. So what the US is saying is very publicly, we're engaging Iran. We want to talk about this. We hopefully want to keep it on a more even keel.
Roz, where's China in all of this? Do they have a role to play?
Well, that's very interesting. The US is also publicizing its efforts to get China to engage with Iran, saying that China's got some cachet with Tehran. They can help negotiate. They can help keep things on that lower boil, and calling repeatedly on China. We've seen the US Secretary of State having phone calls with the Chinese Foreign Minister Wang Yi, repeated phone calls, it seems, even, and again urging China today to follow through. The question is, how much influence does China actually have? Does China really want to get involved? From the language so far from Beijing, it seems they don't want to.
Roz, thank you so much. Roz Matheson there, and our Oliver Crook in Tel Aviv. Now, coming up, we'll also dive into markets as treasuries drop, as traders track these U.S. efforts to contain the Israel-Hamas conflict. We talk markets next, and this is Bloomberg.
The deal was the brainchild of Apollo CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
The conversations that matter, the insights you need. This is The Pulse. I'm Francine Lacqua here in London. Now, demand for haven assets easing this morning with treasuries sliding as traders weigh U.S. efforts to prevent further escalation of the Israel-Hamas conflict. Now, joining us now for a look at the markets is Hannah Smith, State Street Vice President for ETFs. Hannah, as always, thank you so much for joining us. It's a heavy week. It's been a heavy 10 days, and markets haven't really fully priced anything, actually. They seem to fluctuate. What do you think they do next?
Yeah, I think at the moment the market. Well, good morning. Firstly, it's great to see you. Yeah, I think at the moment the markets coming into what we saw with the Israel-Gaza conflict were already extremely cautious, and so what we've seen is some increase in risk aversion. But given where we saw the markets already, as in high allocation to defensive and really a risk-off sentiment, that hasn't really changed too much. I think the big narrative now is the higher for longer, and what we saw in December is returns in the bottom 20th percentile of anticipating that now we're going to have rates for a longer period of time, and that's really what's been moving them so far.
But oil has nudging up a little bit, nothing huge, but if it goes a little bit more elevated, does it change the case for interest rates, actually? So higher for even longer or even higher than we're expecting?
Yeah, definitely. I think that's the biggest concern. And if we look at oil at the moment, as you mentioned, it hasn't moved significantly. However, if we do start to see supply constraints, then this could really push up the oil price. And then that's when the risk really comes for inflation expectations.
What do you look at in terms of, I don't know whether it's Fed speak or Fed speakers or University of Michigan or anything like that, to really give you a sense of whether there's also a stagflationary danger in certain parts of the world?
Yeah, it's a great question. I think at the moment what we're looking at now is a big focus is on the US and whether they're going to be raising rates in the next at the next meeting. And I think the Powell comments on Friday are going to be hugely important. And I think that's really going to give the market an idea as to whether anticipate additional rate hikes or not going into the end of the year.
And I mean, higher for longer, we talk about tabletop, unclear for how long they'll stay at these kind of levels and what breaks next.
Yeah, definitely. And as I mentioned, this is really the biggest concern for the markets. I think at the beginning of the year, there was this expectation that rates would peak and then there would be some period of time and then we'd start to see rate cuts. And what's really agonizing the markets at the moment is there is no clear insight into how long rates are going to stay higher for. And this is really provides investors with a lot of concern because then there's not a clear idea as when to enter into equities, when to enter into fixed income.
What's the ideal time actually of entering into both?
Well, I think actually if there were a recessionary environment, then that would be actually quite a good time to enter into equities. That's when we'd expect valuations to look a little bit more attractive. At the moment, on a relative value basis, equities do look slightly more attractive. However, that's very much in the defensive sectors. And then also with a little bit of energy, given the pressure on oil prices at the moment.
And I also had a good conversation actually with the Standard Chartered chief executive and Bill Winters, and we're talking about U.S. debt and the fact that the market haven't 100% latched on to what this means longer term, right? So what it means for U.S. dollar and for companies that have a lot of their revenue in U.S. dollars. Is that something that's on your mind?
Yeah, I think so. I think it's incredibly important, and particularly now with rates being higher, I think what we're likely to see now is a big refinancing wall and the impact of higher rates now being passed on to companies and obviously the abilities for governments to repay their debt as well. So it's definitely an area to watch.
Do you worry more about Europe than the U.S. because of the proximity also at some of the geopolitical points?
Yeah, I think so. I think Europe's been quite interesting because there was obviously a lot of concern after the outbreak of the Ukraine war and the ability for Europe to maintain its energy reserves and also withstand a recession. And we actually saw a positive outcome last year. Europe was able to avoid a recession. The growth was at 3.4%. And also their gas reserves are incredibly high now, between 90 and 95%. They're only 55% before the war. So Europe's been very resilient and valuations are quite attractive. So I think it's one to watch from a market's perspective. But obviously, if you compare it to the US, growth has been incredibly strong there. So there's different dynamics within both markets.
And what about the UK?
Yeah, the UK. I think the UK is quite delicate at the moment. Growth is okay, not extremely strong. I think that if you look at the UK from a market's perspective, actually a weaker sterling is beneficial because the majority of companies generate their revenues from overseas. But I do think that the UK, given its sector mix within the markets, is quite attractive from an investment standpoint.
Hannah, thank you so much, as always, for joining us. Hannah Smith there, Vice President of State Street's ETF business. Now, coming up, we take another look at oil markets as the U.S. warns Iran not to escalate the Israel-Hamas conflict. That's next, and this is Bloomberg.
I used to have a data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had never used a phone. They'd never heard it ringing. Today, 75% of the African people have a mobile phone. They use one, okay? And we will do the same with the internet in the next 5 years. You know, we will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support, because we are the best investment case for this in the world.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg. Context changes everything.
From New York City,
From London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching. You do not want to miss this story.
Is there the kind of upside?
The conversations that matter, the insights you need. This is The Pulse. I'm Francine Lacqua here in London. Now, oil is trading in a narrow range after last week's gains, with Israel yet to launch its ground offensive into Gaza and the U.S. ratcheting up efforts to contain the conflict. Now, joining us for more is Amrita Sen, founder and director of research at Energy Aspects. Amrita, as always, thank you so much for joining us. Tensions are so high, and it's unclear what this means for oil imports, oil exports, but also, I guess, oil demand in general.
Yes, and I think what I've seen last week, for the first time in a long time, traders are really struggling to figure out how to trade this, because there's no direct supply losses. Yet the region, I mean, we've got Iran, we've got the whole GCC, we've got Iraq. The geographical proximity is probably just too close for comfort. And we saw prices go down 2 weeks ago on the back of just positioning and macro fears. And then, of course, you saw the rally on Friday. Nobody wants to be short into a weekend as well. And right now, it's just a lot of, we don't know how this goes.
So let's talk about what we know, and then we'll maybe try and figure out what could happen next. But how's demand holding up?
Demand's okay. I mean, of course, it's slowing, which is what is to be expected. The global economy is slowing, U.S. for sure. A lot of the excess savings that we've accumulated over COVID, that's coming off, and we are predicting by the end of the year, at least in the U.S., all that excess savings would have gone. So gasoline's held up really well compared to, you know, what the macro backdrop has been. But that's the thing we are watching very closely that could actually mean that gasoline demand slows further. And we've seen gasoline prices come off quite sharply. Diesel, industrial recession ongoing. European demand has definitely been weak, but the rest of the world is, and emerging markets really good. Like China, India is still holding up very, very well.
And there's enough supply out there.
Yes,
right?
Yes.
So that's been, so if something were to happen, if the escalation, you know, continues in this conflict, what happens to Iranian oil?
I think that's the risk the market's trying to price. Everybody, and rightly so, is trying to downplay Iran's involvement because, again, there's no upside in escalating it. But the market is focused on, you know, Iran's been exporting about 1.7, 1.8 million barrels per day of oil. Now, there's another strand of thought that the U.S. would enforce sanctions more, they've turned a blind eye so far this year, but it's hard for them to do that given China is the only buyer of Iranian oil, and they bypass the U.S. banking system anyways. But that's really the focus. I mean, we don't think, or rather I'd say that we think the probability of a strike on Iran is very low. Yeah. Of course, right now, given the situation, you can't rule anything out.
Yeah. I mean, there has been in the past, you know, saying, or thoughts and saying, look, they could close the Strait of Hormuz in terms of an escalation.
Yes.
Does that send the price of oil to 150?
I mean, look, any escalation would, because ultimately, inventories across the board are super low. Diesel, gasoline, and products in particular, because refining has really struggled. The positive for crude is that at least there is spare capacity. Saudi Arabia, Russia, they've voluntarily cut production that could be brought back in the event of a genuine supply loss. But ultimately, the market's extremely tight. So yes, I would expect a very quick, rapid rise in prices if there were to be an escalation.
I mean, what are inventories like? I mean, strategic reserves, it's unclear whether we actually have that much bandwidth, right, to release.
Yeah, I mean, I would say the U.S. government's kind of used up its chips in some ways. They've released so much inventory last year from the strategic reserve, little bit this year. But yeah, sure, you could do another 120 million barrels before you're effectively at levels which, again, integrity of those caverns are in question. But I don't know whether you'd want to necessarily do that at a time when geopolitical tensions are rising and there could be potential supply losses. And I think that's the challenge, and which then means, again, Iran's already in the market. So where is your incremental source of supply outside of OPEC?
And Amrita, I mean, this is, again, speculation. We don't, but if there were something happening in terms of escalation, could Iran sell the oil elsewhere and actually the Western world gets reserves from other parts of the world, or a little bit like we had with Russia, where there was, moving around,
yes.
but actually we still had enough?
The problem is that the sanctions on Iran, I mean, there's European sanctions, there's US sanctions as well. So the only country that can buy Iranian oil is actually China, and they're already doing so. That's what makes it trickier, that where else could it go? And I think, if anything, China, it's paused its strategic reserve refilling, but there's rumors, again, that given the geopolitical tensions, they might restart it. So other countries are actually thinking more about long-term stability and supply and making sure that they have enough inventories. I think the West has been a bit short-sighted about this, and I think that's where the discrepancy lies.
Is there a case where actually the price of oil drops from here?
I would say,
demand destruction.
Yes, of course. I mean, not at current prices, right? I think current prices are low enough, especially inflation-adjusted prices are not high at all. So I don't buy into the argument that even $100 oil, I don't think is high enough to kill the economy. But if there was to be a severe slowdown driven by higher interest rates and the Fed over-tightening, then of course, yes. But I think that's also exactly where Saudi Arabia and OPEC Plus will remain very vigilant, come in, and if required, cut again. But, again, it's not our base case, but to your point, it could happen if the economy were to falter.
Amrita, thank you so much, as always, for joining us. Amrita Sandar, founder and director of research at Energy Aspects. Now, we do have a piece of news that we need to bring you. This is actually on United. Manchester United falling some 18% as the Qataris are set to withdraw their bid for the football club. So for the moment, you can see, I think we have, there you go, Manchester United now down 12%. It was pre-market down 18% just moments ago. Now, coming up, we'll be speaking to the Israeli ambassador to the EU and to NATO, Haim Rajev, as Israel prepares for a ground offensive in Gaza. That's coming up next, and this is Bloomberg.
Race relations in the United States are much better than when you were growing up in Mississippi, or do you think we've made less progress than you think we should have made?
Both. I think that much better than when I was growing up. There's so many people who occupy areas, and I never thought I would see them in, but I would have hoped it would be better. It's been a lot of progress, and somehow we're in an era now where, in spite of the progress, race relations in certain areas has become very scary. You know, some of the things that one reads about now remind me of growing up in Mississippi.
The top names in business are on Bloomberg.
The market is starting to look over the Fed's moves into falling interest rates.
We actually think that core inflation is going to fall a little faster than the Fed expects, and that will allow them to start cutting rates by March of next year.
You get a price spiral when labor markets are tight. In manufacturing, labor markets are still very tight right now in the US.
Nobody covers business like Bloomberg. Context changes everything. Markets count down in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
This is Bloomberg.
President Biden is said to be weighing a trip to Israel as Secretary of State Antony Blinken returns for more talks as the U.S. tries to contain the war between Israel and Hamas. Gaza continues to brace for a ground offensive amid a humanitarian crisis. Diplomatic efforts to contain the conflict are steadying markets, with European stocks flat, U.S. futures edging higher, oil slipping after surging almost 6% on Friday. And Polish stocks rally, with the country's opposition on course for a majority after Sunday's election. The results denying the ruling nationalists a third term, steering the country back into European mainstream. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, the European Union leaders will hold an emergency virtual summit tomorrow on the conflict in the Middle East. The EU has strongly condemned the attacks by Hamas and called for Israel's response to comply with international law. It comes as we're told that President Biden is weighing a trip to Israel as the White House seeks to avoid further escalation. Well, we're now joined by Chaim Regev, Israel's ambassador to the EU and to NATO. Ambassador, thank you so much for giving us a little bit of time. I know it's a very busy day for you. The U.S. Secretary of State Antony Blinken, we understand, will make another unscheduled return to Israel after stops in Jordan, Bahrain, Qatar, Egypt, Saudi Arabia, and the United Arab Emirates. What have you learned about U.S. diplomacy over the weekend?
Before touching U.S. diplomacy, let me say that we were very touched by the visit of the leader of the EU in Israel, President von der Leyen, President Metzola. They were the first leader that come and visit the site, and we were very touched by the strong support that we see here from Brussels. As for the U.S. is active. They try to, first of all, we get in a strong support from the U.S., and it's very and extremely important. And it's important also that the region, the leader of the region, the Arabs, will understand exactly the implication of what's going on. This war that Israel, that actually was initiated by Hamas, it's not only the war
for example, that the U.S. president will soon visit Israel following an invitation by the prime minister?
We are working on these visits and other. Right now, we are focusing on eliminating Hamas. Hamas conduct a crime that right now we are focusing on eliminating their capability and focusing on that.
Yeah. Do you know more about the exact reasons why President Biden was invited and why he's considering such a trip amongst hostilities? Do you need the president to go to Israel, and do you think this war will be de-escalated?
First of all, it's a show of support. It's extremely important that we keep seeing this kind of support, and we see and feel this support from the U.S., and this is part of this visit. show strong stance together with the state of Israel. As for de-escalation, right now, we are focusing, as I mentioned several times, on eliminating Hamas and its capability.
Ambassador, Secretary Blinken says it's critically important how Israel goes about pursuing Hamas. Do you think a ground invasion of Gaza will provoke a second front of this war?
We hope not. We are ready to everything. Right now, we are focusing on Hamas. This is the goal. This is the aim. And we try to avoid other fronts, and we hope that it will not happen. But right now, as we speak, the focus is on Hamas, on Gaza, eliminating its capability, and fighting against him.
Yeah. Ambassador, have EU officials been raising humanitarian and international law questions to you when it comes to Israel's actions in Gaza?
There are some concerns, but Israel keeps saying that we will act according to the international law. Our aim is not to harm any innocent or uninvolved civilian or population. We are targeting Hamas, its activities, its facilities, and do not harm anyone who is not involved. The problem right now is that Hamas using the local population as a human shield against our to avoid our activity, and this is right now the biggest attempt by Hamas. Yes, please.
How are you coordinating with Europe on humanitarian aid in Gaza?
Right now, we are in touch, and we got approached by some EU official on that, and we are focusing right now, as I mentioned, on the military activity, on Hamas. And we are looking ahead, and we will see whatever will need it to be provided. We will work on it, but right now this is the focus.
There have been also tensions in a lot of European countries with protests and solidarity with both Israel and Palestinians. How closely are you watching this?
We are looking into, of course, we are looking into those, but for the meantime, we feel the strong support, the full understanding, what happened there, the atrocity that Europe saw, that we faced, and Europe saw. I think that the implication of that is strong support for the state of Israel. There are some others that try to counter this, but as for the meantime, we see mainly a strong support from leadership and as well as from the street.
All right, Ambassador, thank you so much for your time today. Hamer Agevner, Israel's ambassador to the EU and to NATO. Now, coming up, the U.S. is said to be planning to further tighten curbs on China's access to advanced semiconductors and chip-making gear. We'll get the details shortly. This is Bloomberg.
I was putting so much pressure on myself. And when I changed my mindset midway through the tournament and just approached it one game at a time.
Lloyd with Morgan streaking. She's chipping the goalkeeper! Off the post and in! Hat trick for Lloyd!
I went from really just being under the radar to suddenly being in the spotlight.
You know who I'm talking about, Carly Lloyd! Carly Lloyd! Ladies and gentlemen, we have an American hero.
We had speaking engagements, sponsors that wanted to sign me, appearances, you name it, I had it. It became very mentally draining for the next easily couple years because I was extremely busy. But I knew that if I'm going to have any type of retirement, any type of financial stability when I'm done playing, I had to take every advantage of my opportunity.
The top names in business are on Bloomberg.
I see a world where financial conditions have gotten tighter, and the transition mechanism, which the Fed would like to see in slowing down the economy, which we all expected, it's taken a lot longer. So the real impact of higher costs around the globe, in the U.S. and Western Europe, it's not been felt yet. And so when people say, well, we're going to have a soft landing, I'm skeptical.
Nobody covers business like Bloomberg. Context changes everything.
The conversations that matter, the insights you need. This is The Pulse. I'm Francine Lacqua here in London. Now, China's central bank is making the biggest medium-term liquidity injection since 2020. This comes as the PBOC steps up efforts to support the nation's economic recovery and debt sales. Now, the move comes as Beijing considers a new round of stimulus to help the economy meet the official annual growth target of around 5%. Now, the U.S. is said to be planning to further tighten measures, restricting Beijing's access to advanced semiconductors and chip making gear. Well, for more on all of this, let's bring in Bloomberg's Alan Wan. Alan, hi, thank you so much for joining us. So do U.S. officials actually see loopholes from the sanctions announced last year?
Yes, that's right. I think when the U.S. announced the measures last year, they did rather quickly without actually getting their allies on board, countries like the Netherlands, South Korea, and Japan. And now they're going to try to prevent some of these U.S. firms from exporting their chips to these other countries. So that's part of it. And then the other part is the fact that in August, Huawei was able to launch a new smartphone using a very advanced semiconductor. And there's a feeling that something needs to be done, even though it looks like Huawei was able to develop its new smartphone through homegrown semiconductor technology. But there's definitely a feeling that the U.S. had to do something in response to everything that's been going on here in the last few months.
What exactly does the U.S. plan to do to fill those loopholes?
Well, one thing the U.S. is going to do is it's going to restrict exports of these kind of chips, especially the accelerated type chips. Those are using AI, large language models, being exported to the overseas units of Chinese companies. Also, U.S. companies that wanted to export to other countries like the Netherlands and South Korea are going to have to get a license as well in order so that there's no, way around, these sanctions.
Alan, thank you so much. Alan Wan there, of course, on the very latest ongoings in China. Now, here are some of the other stories that we're watching today. Australia has voted overwhelmingly against including First Nations people in the country's constitution, rejecting a proposal to set up an Indigenous advisory body to Parliament. The Prime Minister, Anthony Albanese, is facing a struggle to reunite the country after the failure of the measures, one of his key campaign promises. Now, the heir to a fruit exporting dynasty will become Ecuador's next president. Daniel Noboa beat his socialist opponent, Luisa Gonzalez, in a runoff with over 90% of votes tallied. It was Ecuador's bloodiest presidential election in living memory after one candidate was gunned down while campaigning. Now, Noboa will now prepare to take on Ecuador's economic issues and political instabilities. And New Zealanders have picked a centre-right government to manage the mounting economic challenges in the aftermath of the pandemic. Now, Christopher Luxon is set to become the nation's new prime minister after his National Party won the lion's share of the vote in Saturday's election. Now let's switch focus to U.S. banks and bank earnings. Well, J.P. Morgan has posted another quarter of record net interest income and boosted its forecast for the year. However, the chief executive, Jamie Dimon, warns the economic outlook is getting cloudier, especially given raising political risks. Well, let's get more on all of this now with Bloomberg's Charlie Wells. Charlie, you do this so well. When you look at the reports on Friday, what really stood out?
Well, Francine, we kind of went into this earnings season almost feeling like it was that dreaded dentist appointment. And we actually got there, and there were no cavities. It was actually a lot better than people thought. So there'd been so much negativity going into this third quarter. We had the regional banking crisis earlier in the year. We had all of this volatility in the bond market. And also, bank stocks have been really underperforming this year. But we saw at J.P. Morgan, they had a boost from that interest income. Same thing at Wells Fargo. And then a group at Citigroup, actually, a trading group at Citigroup actually overperformed.
So what are you expecting from Goldman Sachs and Bank of America?
I mean, very different banks, right? I think with Goldman, we've got that investment banking focus. I think there is some expectation that they could get a lift from equities underwriting. We've seen more activity there, which we've been hoping for a really long time. Bank of America, I mean, they have more exposure to some of these long-dated treasuries, so there could be some surprises under the hood. But given Friday, it's seeming like a rising tide is very likely to raise some of these banks as well.
Yeah, it's incredible. The U.S. economy seems strong, Charlie. Thank you. As always, Charlie Wells there with the very latest on the U.S. banks. Now, the rout in the U.S. government bond market can also be attributed to the absence of all of its anchors. At least that's according to Mohamed El-Erian, the chief economic advisor at Allianz and Bloomberg opinion columnist.
Monday, Tuesday was about dovish Fed statements, lower yields. Wednesday, Thursday was about somewhat hotter than expected inflation, higher yields. Today is about geopolitical concerns, lower yields. So that's the easy answer. The harder answer is that we have lost all anchors to the bond market, all of them. We've lost the economic anchor, we have lost the technical anchor, and we've lost the policy anchor. So what we're seeing is this enormous volatility. So far, we are lucky in that when we have overshoots, it triggers some sort of reaction. If yields go too high, some people start wondering about locking in higher yields for longer. If they suddenly go down quickly, those who have been caught offside with massive positions, loss-making positions, take advantage of that. So the good news is there is a certain amount of range-bound dynamics, but nevertheless, this sort of volatility is simply indicative that we've lost all anchors for this bond market.
Well, let's talk about another anchor we've lost and another situation as well. Yesterday was a two-part story. You're right to point out CPI, small upside surprise, yields start to drift higher. Then we had this really soft 30-year auction in the afternoon. Mohammed, have we also lost predictable sources of demand when we get supply from the Treasury?
Yes, we have. And we're facing higher supply from the Treasury. So the most important buyer, the non-commercial buyer, the Fed is out. The Fed is a seller. That's gone. And don't underestimate the importance of a non-commercial buyer that buys in very big amounts and that is predictable. So the Fed is gone. There's questions about overseas buying. Japan, China. Big question marks, especially about China. And then there are the traditional buyers who have been caught offsides by buying too much when rates were artificially low. So there is a real question out there about who's going to buy this additional supply. And if the economy does not weaken, then the path of least resistance for yields is higher.
As things stand, Mohammed, then, does this compromise the Fed's approach to monetary policy?
Look, the Fed's approach to monetary policy has been compromised for such a long time. The minute you're late and the minute you mischaracterize inflation, you then have to go faster, and then you accelerate these dynamics that are taking place. So it certainly complicates it. I think there's a lot of question mark about this narrative that has settled into the market. Don't worry, the Fed will have to do less because the market's going to do more. It doesn't quite work that easily, but it is a very complicated policy outlook.
All right, let's also talk a little bit about football. Manchester United is falling significantly pre-market. I think it was down some 16% at the open of the pre-market, now down 13%, and this is after the Qataris have said they will withdraw their bid for the club. Now, coming up, an exit poll suggests Poland pro-EU opposition is on track for a majority, ending 8 years of rule by the Law and Justice Party. We'll get the latest live from Warsaw next. This is Bloomberg.
deal was the brainchild of Apollo CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
The conversations that matter, the insights you need. This is A Pulse. I'm Francine Lacqua here in London. Now let's take a look at the European markets map. A lot of the focus, of course, is on a possible escalation in the Middle East. What this brings or what this means for the markets, frankly, is completely unclear. And when I was at the IMF World Bank meetings, a lot of the market participants were saying if anybody really game theories what it means, they just don't know. So it's very, very difficult to make a call right now. What we do know is that the markets are somewhat fluctuating. I think the UK is holding on to some of their gains. A lot of the focus is also on everything that we've heard from, of course, treasuries and this higher for longer idea from a lot of the banks or a lot of the central banks. Now, Shell, let's look at Shell because Shell shares have been rising to a record high in London. We know that the new chief executive, who has been in charge for, I think, a little under a year, has been doing everything he can to give back to shareholders. He has also done a bit of a pivot away from some of the green initiatives that his predecessor had put in place. So Shell shares have risen to a record high in London. I don't know whether we have the share price for Shell, but if we do, it's a good time to bring it up. At the same time, the focus is on the price of oil. We had a terrific debrief from Amrita Sen, who again was saying, look, oil for the moment is trading in a narrow range. The U.S. is trying to contain the crisis in Gaza, but it's unclear what will happen. We know that over the weekend, U.S. officials rushed to speak with Middle Eastern nations, including back channel with Iran to contain the conflict. We also know that Secretary of State Blinken returns to Israel today. President Joe Biden is also considering a trip there in coming days. You can see over 2 days, the price of oil is 5% higher. Now, stocks surging in Poland today as the country's pro-EU bloc is seen winning the election. Well, Bloomberg's Warsaw Bureau Chief Piotr Skolimowski joins us now for more on the story. Piotr, thank you for joining us. So run us through the latest. Is Poland heading back to the EU mainstream politics?
Hi, Francine. That's what it looks like at this point, indeed. So what we're seeing is that according to the latest opinion polls, or the so-called late poll, which is based on some of the votes counted 50% and the projections, we're probably going to see a change in the government, not very quickly. At this point, what we're seeing is that the law and justice that has been in power for 8 years will probably be ousted by a three-way coalition of parties led by a civic coalition of former European Council President Donald Tusk. Obviously, with Tusk in charge of the government, that would mean better relations with the EU, which have been strained for a while. The EU has withheld about 35 billion euros of EU funds from Poland over rule of law concerns. And at this point, this seems to be the priority for Tusk right now and his government or his coalition, once it's formed, to make sure that this money keeps flowing. But overall, the idea is also to improve the relations Also, relations with Ukraine that has also been strained over the last few months. So quite a lot to do for Tusk, but at this point we're still waiting for the final results, and we're still waiting for then the discussions over the coalition.
So, Piotr, why are markets reacting so strongly to this news?
Well, obviously, one thing is certainly the fact that the ruling coalition, that there is going to be a change, and what we tend to call the pro-EU opposition taking power, that obviously changes the sentiment on the market. The fact that there won't be any more uncertainty about how those relationship with the EU and the rest of the world will develop. This is a major positive step for the markets. 35 billion euros that we're hearing that were withheld. The concern was this will be just the beginning. There is much more that there's much more money that Poland is supposed to receive from the EU budget. That money was also starting to be, there was a big question mark that's starting to appear over that pot of money as well. So I think that's one thing, but also there's a question of the whole sentiment towards investors. The current government has been having all sorts of conflicts with Germany, for example, Poland's biggest neighbor and Poland's biggest trading partner. With Tusk, he obviously is very close to Germany. He wants those relationships also to improve. So overall, the opposition's victory or the next government led by the opposition would be positive for the sentiment for investors.
Piotr, thank you so much. Piotr Skolimowski there, of course, joining us with huge analysis, important analysis on Poland. Now, Shell shares are actually rising to a record high in London. Again, this is on the back of a lot of uncertainty with oil. For the moment, oil trading in a narrow range as the U.S. is seeking to contain the Gaza crisis. The U.S. president may also visit the region, actually, as Israel preps the ground invasion. Now, the share price for Shell is not moving by that much today. It's gaining 1.2%, but if you look at the context, it's now at a record high in London. Now, let's recap some of the top stories this morning. And the U.S. Secretary of State, Antony Blinken, has arrived in Israel for his second trip since the war with Hamas erupted. It's part of a diplomatic push by the U.S. and its allies to actually contain the conflict from spilling over to the region. Meanwhile, humanitarian concerns mount in Gaza ahead of an expected ground invasion by the Israeli military. Up next, Bloomberg Brief with Danny Berger in London and Manus Krani in New York, and this is Bloomberg. Nurturing also can come from men, and it's one of the qualities, I guess, that you found in your mentors that also pushed you up. Do we need even more nurturing post-pandemic? Is the way that we talk with employees going to change?
I think talent becomes the single biggest differentiator of a successful entity versus an unsuccessful entity. So you've got to do everything possible to hire, train, retain, put your arms around talent. I mean, you've really got to focus on your talent. In the past, it's always been give them money, show them that they have an upward mobility and can make even more money, and that's the only reason people come to work. I think post-pandemic, we are seeing more and more people say, I have to worry about me as a person. I have to worry about my family. I want to worry about my well-being, my mental health. So we've got to start encompassing people as holistic humans as opposed to a tool of the trade, which means that we have to engage with them head, heart, and hands, not just head and hands. The heart has to be engaged. So we have to show more empathy, show that we care, that they are citizens of the community, they're members of the family, and all of those have to come into consideration as we help an executive or an employee. Be an employee and be a person of the community and the family. The stakes are higher.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to The Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question. That's a question I get all night.
Bloomberg, top experts, great questions.
Good morning from our world headquarters in New York. I'm Manus Cranny.
And from our studios in London, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Back channels to Iran are open as the U.S. warns against escalation of the Israel-Hamas conflict. President Biden may visit Israel in the coming days, adding to the diplomatic push after Antony Blinken met with Arab leaders over the weekend. Elsewhere, the U.S. administration plans to tighten sweeping measures to restrict China's access to advanced chip tech, as Beijing steps up the efforts to support the country's fragile recovery. And on Capitol Hill, Democratic leader Hakeem Jeffries says House Democrats are having informal talks with their Republican colleagues about a potential bipartisan solution to find a speaker. Good morning. Yields are rising this morning in the U.S. as the bond markets are trapped between that vortex of the hell that is war and a defense and a hedge, and the reality of a higher and more aggressive Fed. Even though Patrick Harker says we've done quite a lot, yields rise by 6 basis points this morning. Don't forget, last week they did perform as the hedge. The 30s were down by 19 basis points and the 10s were down by 17. Now you've had 4 weeks of a rising US dollar. This morning we're down by 1/8 of 1%. Again, what you have here is a big conviction call from Union Bancaire Privée. Peter Kinsella will be with us a little bit later. He still sees the yield differential as being the alpha for this. The euro dollar, by the way, JP Morgan, Global FX Strategy have moved their call from 105 down to parity. So again, the alpha of the dollar on the rates differential and indeed on a haven status remains. The oil market down by 0.5% this morning. What you have is, of course, as these back channels. What are these back channels? It rallied by 7% last week, 6% on Friday, and the hedge funds have slashed their bullish bets, Danny, on the oil market. So they are getting skittish in hedgeland. Good morning.
Good morning, Manus. I do think it is that back channeling that seems to allow us at least the hope that that can prevent escalation, has us nibbling around risk. S&P 500 futures up about 0.2%. Mike Wilson, though, the team over at Morgan Stanley are warning that the internals are looking worse. Therefore, the odds of a fourth quarter rally are down. RBC, for their part, says that so far the reception to the earnings season has been good. So a lot of differing opinions on this American equity market. Now, Europe had been able to start positively, at least in the futures trade. But when more liquidity came in, we started to fall. We're down about 1/10. But China, this is the big one, Manus, we're down 1%. We did have Chinese officials stepping in with more stimulus and more measures to get stringent on short sellers. That hasn't helped us so far in the China equity session. CSI 300 down by 1%. Again, maybe catching up to some of the risk off that we saw on Friday.
Well, this week, Danny, I think it is going to be risk defined by China. Are you at the bottom of China in terms of the stimulus that comes. I think we are going to be controlled by what happens in terms of these back channels. What are they? Is there a de-escalation or is there full ground assault? And I think ultimately we will be redirected on the inflation narrative, but for the week's momentum, it is down to geopolitics of the Middle East and perhaps the bottoming of China.
Well, if geopolitics, Manus, means that we're going to be buying bonds, that's certainly going to be challenged by the inflation narrative. Sure, Harker says disinflation is in, but the UMich survey had inflation expectations for consumers at a 5-month high.
And that reinforces the higher for longer. Let's reset to our top story. President Biden is weighing a trip to Israel. The president warned against Israeli occupation of Gaza and said the U.S. troops don't need to be deployed on the ground.
Can you foresee U.S. troops in combat in this new Middle East war?
I don't think that's necessary. Israel has one of the finest fighting forces of the country. I guarantee we're going to provide them everything they need.
Let's get to Oliver Crook. He's in Tel Aviv. Oliver, the very latest on the Israeli ground offensive, it seems as if some back channels are in operation and some opening for exodus of the Palestinians has also been underway. What is the latest?
Yeah, so what we got this weekend was a sort of confirmation from the Israel Defense Forces that there will be a ground component at some stage in the next phase of this war. Right now, they've been focused on the aerial bombardments, which have continued through the weekend, and also trying to open up corridors, these sort of arteries that go down the center of Gaza so that civilians can evacuate from the north down to the south. They've had a sort of a non-bombardment clause on Saturday, Sunday, and Monday, and actually today, 8 till noon, they said they will not bomb, and that expires right now. So the other issue in Gaza is it is very difficult for aid to get in and out. There have been some discussions about possible opening on the border with Egypt, but that has not yet been confirmed. We understand there are aid trucks lined up there. And then the attention is also going to the north. There has been more and more fighting on the northern border with Lebanon, not to a point that is sort of in full spillover, but it's something that people need to be conscious of. There has been a second aircraft carrier group by the United States deployed to the eastern Mediterranean. And of course, last night we had Chuck Schumer, Mitt Romney, a number of bipartisan senators here in Tel Aviv who gave a press conference espousing full support for Israel and saying that they're going to get something done in terms of aid from the United States.
Right. Well, on that note, Oliver, we have U.S. Secretary of State Antony Blinken back in Tel Aviv today after that trip across the Middle East. At this point, what are his top priorities?
So he's just landed in Tel Aviv, we understand. And so let's just remind everybody where he was. He was in Israel, then to Jordan, then the Bahrain, UAE, Saudi Arabia, Egypt. He's been talking to all of these leaders. And his priority really is a question of escalation as number one. Number two, aid in getting some of these corridors open in Gaza. But then also the question of hostages. And we don't get a lot of information on the hostage negotiations. Obviously, those are intensely sensitive. So there's some back channels working there. In terms of aid, we understand that the border crossing with Rafah with Egypt may open up, and we understand from Egyptian ministries that they are preparing for the possibility of a large influx in their hospitals of Gazans. And the question of escalation, this is about deterrence, yes, with Iran, but it's also about having a message with Israeli leadership. He said it on Thursday when he was here in Tel Aviv. How Israel goes about dismantling Hamas will be absolutely critical, and we saw that in full display with huge protests across the streets of the Arab world. And so these are all the things that he needs to bring back now when he's talking to Israeli leadership today.
And herein lies the point, Oliver. The word that I use and Danny used to try and put context around this for our audience, our global audience, understanding risk, is about back channels are open, and there is this effort ahead of any ground invasion to try and change the situation. But what are these back channels? Is Qatar the best hope? I mean, they are the home to the political office of Hamas. So is it the Qataris that have the power to shift the dial?
But we also understand, yeah, I mean, that obviously is going to be one of the main levers that the United States is going to try to pull. But we understand that there's also been efforts within the United States to back channel with Iran. We understand that the Saudis have been in communication with Iran as well. And also the rhetoric from Iran has been fairly sharp. Starting on Friday, they said that if this continues in Gaza, they could see another front opening up in the war. We heard from the foreign minister's office today from Iran saying that a new front could be limited not just to a specific border, but the entirety of what what they consider to be Palestine. And again, we have a second aircraft carrier group coming to the Eastern Mediterranean. And just to put a little bit of kind of contours around kind of what the threat from Hezbollah is to the Israeli state, there are thousands and thousands of rockets sort of disguised in southern Lebanon that Hamas controls, and that, you know, Iron Dome is fairly effective. We say there's about a 90% hit rate on that. But if you get thousands of rockets going over, you know, 10% of many thousands is still a lot. And also that volume, you may not get a 90% rate. So these are all the things that are front and center here in Israel, where we've been getting about 2 sirens a day since Friday here in Tel Aviv.
Oliver, thank you very much. That is Oliver Crook reporting live from Tel Aviv. Now, with the war between Israel and Hamas persisting, IMF Managing Director Kristalina Georgieva warned it's a very difficult time for the world economy.
What the fund is concentrated now on is to very carefully monitor what could be the economic impact of the new eruption of tensions in the Middle East. So far, what we see is relatively contained. Oil prices are going up and down, but there hasn't been a huge spike. Some nervousness in markets, understandably.
Joining us now is Bloomberg's Will Kennedy, Senior Executive Editor for Energy and Commodities. Well, thanks for joining. I mean, Georgieva talking there, no big spike in oil prices yet. Bloomberg Intelligence, Bloomberg Economics says that if there's escalation, it could get to 150. Where do we stand right now in the fragility of this oil market, dependent on what's happening in the Middle East?
It's a nervous market. On Friday, we finally saw quite a bit of buying, and we saw Brent rise $5 fairly rapidly. In the options market, we also saw people buying a fair amount of protection to oil going a lot higher. And again, gold also spiked. So you saw some concern going into the weekend that the war may escalate and that people should position themselves. Today's a lot calmer. You've described all the diplomatic efforts that are going on, perhaps to make sure that things are not quite as catastrophic as they might otherwise be, and oil market is waiting to see. But clearly, the progress of the situation in the Middle East is a dominant driver of the oil market right now.
Well, good morning. I like one of the stories that we put out this morning, which is Biden is going to struggle to try and batten down both on Iran and their exports, which we know are strong, Will, especially to China, and at the same time try and readdress the political narrative and the supply narrative with Russia. I mean, we're only like a couple of headlines away from $100 oil. Is that the biggest issue at the moment, the Russia-Iran balance of power in the oil market?
Well, as you know, Manus, the US has been concerned to try and keep the oil market fairly well supplied. It is a huge political issue, and we're going into an election year, and I think that the Biden administration won't want to see oil prices rise too far, too fast. They can avoid it. But at the same time, there are political imperatives that might suggest that they may want to look both at Iran and Russia. On the Russian side, the price cap, which is one of the flagship policies of the administration, clearly isn't working anymore. Russian oil is selling at the market price and a long way from the price cap. And on Iran, given the situation in Israel, there is a lot of pressure to clamp down on those exports that come freely. So they will probably have to act on both. How much they can really change is another question. And I think that a lot of people in the market think the Iranian flows in particular, which mostly go to China, are fairly well insulated from US action at this stage.
All right, Will, great to get your thoughts this morning. Will Kennedy there from the energy team. Now let's get to some of our other top stories that are trending on the terminal this morning. Poland's opposition is on course for a majority after Sunday's election, an upset that would deny the ruling nationalists a third term and seek the country re-engaged with the European Union. And over in New Zealand, voters have picked a center-right government to manage the mounting economic challenges in the aftermath of the pandemic. Christopher Luxon set to become the nation's new prime minister after his national party won the biggest share of the vote in Saturday's election.
Well, on Capitol Hill, Democratic leader Hakeem Jeffries says informal talks surrounding a possible bipartisan solution to the speakership situation is underway. The House has been without a speaker since October the 3rd. Representative Jim Jordan is currently the front runner for that position. Danny.
And elsewhere in the U.S., pharmacy chain Rite Aid has filed for Chapter 11 bankruptcy protection and said it will shutter more stores. It also said it clinched a restructuring deal with holders of its senior secured notes and appointed Jeffrey S. Stein as CEO, citing his expertise in turning around companies.
Well, coming up, we speak to Klaus Bader, Global Chief Economist over at Societe Generale, right here on Bloomberg.
I was putting so much pressure on myself. And when I changed my mindset midway through the tournament and just approached it one game at a time.
Lloyd with Morgan streaking. She's chipping the goalkeeper! Off the post and in! Hat trick for Lloyd!
I went from really just being under the radar to suddenly being in the spotlight.
You know who I'm talking about, Carly Lloyd! Carly Lloyd! Ladies and gentlemen, we have an American hero!
I had speaking engagements, sponsors that wanted to sign me, appearances, you name it, I had it. It became very mentally draining for the next easily couple years because I was extremely busy. But I knew that if I'm going to have any type of retirement, any type of financial stability when I'm done playing, I had to take every advantage of my opportunity.
The top names in business are on Bloomberg.
I see a world where financial conditions have gotten tighter, and the transition mechanism, which the Fed would like to see in slowing down the economy, which we all expected, it's taken a lot longer. So the real impact of higher costs around the globe, in the U.S. and Western Europe, it's not been felt yet. And so when people say, well, we're going to have a soft landing, I'm skeptical.
Nobody covers business like Bloomberg. Context changes everything.
This is Bloomberg Brief. I'm Manus Granny in New York with Danny Berger in London. The U.S. plans to tighten curbs on China's access to advanced semiconductors and chip-making gear, closing the loopholes from last year's measures. The Biden administration will add Chinese chip design firms to the trade restriction list and impose additional checks on companies attempting to evade export controls by routing shipments through other nations.
Now, at the same time, Manus, China's central bank is making the biggest medium-term liquidity injection since 2020, rather. This is as the PBOC steps up efforts to support the nation's economic recovery and debt sales. Now, Beijing is considering a new round of stimulus to help the economy meet the official annual growth target of around 5%. Joining us now is Klaus Bader, Global Chief Economist at SocGen. Klaus, great to see you. Look, one thing, and I know we've talked about this idea before, of when does the stimulus actually add up to something? A great quote from Macquarie on this, saying that there are two scenarios. One of these is that the piecemeal efforts would add up eventually. The second one is at a certain point, the policy stance would turn more decisive as patience is exhausted. In your mind, are we closer to one or two?
I think at the moment we're closer to one. I mean, we'll see. On Wednesday, we'll get the latest economic activity data, industrial production, retail sales, etc., for September, and we'll also get already the second quarter GDP numbers. And we think they're likely to point to a bottoming out of the economy. You know, even though the year-on-year rate in GDP is going to slow, that's really a base effect. The sequential growth is likely to have picked up a bit. The same is true for industrial production. Retail sales should be better. We also had some better news from the Golden Week. So, and there seems to be, although it's a bit stop-start and one has to be careful, a little bit of an improvement in the real estate sector. And that's, of course, absolutely key. One thing that I think is helpful, we're seeing this right across the Asia-Pacific region, which is an improvement in exports. And that should favor a little bit of an improvement in industrial production in China as well.
Klaus, we're obsessed with benchmarks, and the world is focused on 5% growth in China. I look at some of the numbers, the lending, new yuan lending in September was 2.3 trillion yuan, 1.4 in August, sorry, the month before. So you're looking at a 14-year low. When you see that kind of a ratchet higher in new lending and social financing as well, up 36% from August, how quickly can that deliver towards the 5% target, or is that going to take a heck of a lot longer?
No, I think it'll feed through, relatively quickly. It is, of course, a reflection of the fact that the Chinese government is trying to stabilize the real estate sector. Now, I stress the stabilize because, Xi Jinping's line still is that, as he says, housing is for living and not for speculation. And they don't want to reignite another major housing bubble. But I think that does feed through, relatively swiftly. And I think we're seeing that. Really, to a large extent, of course, the higher lending figures, or in particular the higher social financing numbers, are just a reflection of the government stepping up its stimulus measures. I think the big question is, will it require, and I know that your reporters have been speculating quite a lot about this, is the central government, going to issue in scale central government bonds and stop relying on the local authorities leveraging up, which has been until now the strategy.
I mean, there are hints of that, right? Stimulus coming in the form of infrastructure spending, for example, which would seem more, again, central government-led. But again, it comes down to this thing, which we have talked about before, the ideology of Xi and the type of economic stimulus they do. I mean, does it need to get really bad to kind of resort to something, again, which seems more Western in nature?
Yes, but we talked about this last time when I was here. How much infrastructure can you build? China infrastructure is, pretty good. I'm not saying that nothing can be done, but there are, I think, decreasing returns to scale on this. Stabilizing the housing sector is clearly important, and we do seem to be seeing some progress towards that. What I'm more concerned about is the confidence in the private sector. And that has clearly suffered. There have been a number of quite aggressive steps against private sector companies and sectors, I should say. And to really get the economy going again, I think you have to reignite confidence in that sector. And I think that's going to be hard. And I don't really see a wholesale shift in the attitude of the political leaders towards the private sector.
Klaus, it's interesting, isn't it? Housing is for living only when the market turns south and everything collapses. It's amazing how the headline can change. It was punting and huge speculation. Let's not decry what the housing market was in China for a long, long time. So the tune changed because the market changed. Let's just broaden the context. We're debating sticky inflation in the West, but we're debating disinflation or flatlining inflation, disinflation in China, or deflation. What is the global risk from China, or is it contained? Is China less of a risk globally? I think the last time you were in, you said than perhaps we all think. It just doesn't have the muscle for the world on the inflation narrative that it used to.
Well, that's quite right. You're right. The latest CPI numbers that were released last week were weaker than expected, and they showed a drop back in the annual rate from 0.1% to 0. The question, is China going to export deflation to the rest of the world, is a different one. I mean, in some ways, if they did, hurrah, keep it coming. We do have an inflation problem in the rest of the world. But I looked at specifically what drives, what's the channel for the impact of Chinese price dynamics on the rest of the world. It's obviously not CPI. It's much more in producer prices, and there specifically on consumer goods. And when I looked at consumer goods producer prices in China, and they actually looked less deflationary than they did in the past. So at this stage, I don't think that China's impulse really is substantial in terms of fighting or contributing to the fight against inflation At this stage, it would have to decline a lot. Now, there is, of course, the effect of the exchange rate. The exchange rate has been a bit weak, so that would enhance the weakness of the numbers as terms relative to the domestic numbers. But no, I really don't think that either China is a major factor in deflation, nor do I think it's going to have a huge impact on global economic growth either way.
Klaus, thank you very much. Klaus Bader, Societe Generale, our guest this morning on all things China. It will define, in part, the market risk for this week, right here on Bloomberg.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1.
Right.
So it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right?
Yes.
And making sure you have the right amount of people at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
The top names in business are on Bloomberg.
The market is starting to look over the Fed's moves into falling interest rates.
We actually think that core inflation is going to fall a little faster than the Fed expects, and that will allow them to start cutting rates by March of next year.
You get a price spiral when labor markets are tight, and manufacturing labor markets are still very tight right now in the US.
Nobody covers business like Bloomberg. Context changes everything.
Quick check on your currency markets for you as we go to break here. You've got the Aussie rising. There is stimulus on the way in the form of the biggest cash injection in China since 2020. It moves the Aussie and the yuan lower.
Venture capital, it's been volatile. From bank crisis anxiety to AI exuberance, Caroline Hyde and Ed Ludlow chat with the biggest names about the latest tech trends.
Is AI going to dominate the earnings narrative for this sector this week?
I think we're seeing opportunity and potential platform shift that we haven't seen in a long time.
If you're a company today and you're not embracing the changes that are taking place with AI, you're going to be behind.
How do you prove to the investor base that you haven't just tacked on AI to make yourself sexy?
It's very hard to differentiate if you're not experienced with AI.
The startup stories.
We think this is a watershed moment for technology.
Certain categories are more exciting than others. Right now, obviously, generative AI is a category that is very exciting to startup founders, customers, and venture capitalists as well.
So what we are seeing is a new area of opportunities for new founders to come and change the industries that matter.
And the real talk on realistic valuations.
Some of the best opportunities are sitting right in front of us.
How do you discern which ones are good on the marketplace right now?
I think founders have woken up to the reality that taking on more money at higher terms doesn't necessarily play to their benefit in the long run.
How do you actually invest?
Follow the VC money on Bloomberg Technology, the only daily business show dedicated to tech right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television.
Welcome back to Bloomberg Brief. I'm Manus Cranny in New York.
And I'm Danny Berger in London. Here's what you need to know. Back channels to Iran are open, and the U.S. warning against escalation of the Israel-Hamas conflict. President Biden may visit Israel in the coming days, adding to the U.S. diplomatic push after Antony Blinken met with Arab leaders over the weekend. Elsewhere, the U.S. administration plans to tighten sweeping measures to restrict China's access to advanced chip tech as Beijing steps up efforts to support the country's fragile recovery. And on Capitol Hill, Democratic leader Hakeem Jeffries says House Democrats are having informal talks with their Republican colleagues about a potential bipartisan solution to finding a speaker. Now, it is the hope of those back-channeling talks. More calm, potentially no escalation. It's what's allowing us to buy risk, not in a big way, but in a slight way, up about 1/10 for S&P futures after a tough Friday, despite banks outperforming. Morgan Stanley says that it's going to get more challenging for the fourth quarter, given some of the technicals, some of the internals. You have a bit of a break this week, but next week it's going to be the busiest week this quarter for earnings season. European stocks, those continue to fall. Shell, though, that is trading at a new record. It's had quite the run thanks to higher oil prices and really strong earnings that we saw earlier this month. Meanwhile, China, is that one down 1%. A couple things going on here. You have the U.S. trying to reinforce some of the chip curbs and more stimulus coming from China and more strict rules when it comes to short selling. However, that's not helping us, catching down some of what happened on Friday. Again, 1% lower for the CSI 300, Manus.
Okay, Danny, well, when you look across the assets, you can see this pause as there is a belief that the back channels are open and that something of significance may be delivered. Yields rise, and as Hoisington say, it's been a very humbling year for the bond market participants. A lot of the bond market is long at 3.75%, but there's been no massive capitulation yet. Bonds did act as the hedge in the hell of war last week, but the reality is, of course, the hell that is pernicious inflation, as one of our guests says, can come back to bite you. At the moment, the bond market seems to buy into the back channels have got potential and legs, whether it's the Qataris or the Chinese, that can perhaps help de-escalate. Our next guest says they want to be long the dollar on a rate story and indeed on a geopolitical angst. You had 4 weeks of a rally in the dollar. Euro dollar at the bottom of your screen, by the way. JP Morgan are talking about parity again. So the dollar's ascendance is only temporarily interrupted in the narrative that is back channeling. That is today's headline. That is what takes the heat out of the dollar. It also gives you a tiny bit back to the euro as well. Oil is down by 1/3 of 1%. This is nothing to what it did on Friday. It romped home by 6% on Friday, 7% on the week. The hedge funds are slashing their longs. For now, this sweep of assets is saying to you the markets right now believe in the back channel narrative for now. Danny.
Yeah, and Manus, another, again, risk we have to contend with is China, too, issuing more stimulus. Of course, our last guest from SocGen just did tell us that he thinks growth is going to set to bottom in the data that comes out this week.
Yeah, it's going to be push and pull between geopolitics and any de-escalation or a ground assault. And, of course, the macro level. What can China do to send a signal we're at the bottom? Danny.
Right. And for the moment, as you mentioned, Manus, despite a slight reprieve today, it's been a story of stronger dollar. Joining us now is Peter Kinsella, Global Head of FX Strategist at Union Bancaire Privée. Peter, I mean, what does stop the dollar at this point? Is there anything that you can see, at least that isn't a tail risk at this point, that can really stop the dollar's charge higher?
Hi, Danny. Look, I would say no, not at the moment. You've got 3 or 4 things going on. We've got very, very high front-end yields, and that's very supportive for the dollar in the current context. We've also got steepening long-end yields. And in the context of slowing economic growth outside of the US, negative data surprises, that's, again, very supportive for the dollar. Third, you've also got the geopolitical risk, and indeed the risk of that spiraling and getting worse. So there's really nothing nothing standing in the way of the dollar from an external perspective anytime soon. I think what would eventually be a catalyst for a slightly weaker dollar would be a turn lower in the US labor market. But again, we're not really seeing that anytime soon. So coming to the fourth quarter, it's really all about the greenback, I'm afraid. And it's very, very difficult to bet against it at this point.
Well, good news for Manus, who just moved to the US.
Good for him.
Yeah, you know what her problem is? She's just looking for a nice gift for Christmas, and it's not happening. It's all in her imagination. The rent has taken most of the money, Peter. I just want to leave you with that thought as you travel globally. Okay, so you want to be long in the dollar, both on rates and on geopolitical angst. I get that. That is a classic trade. I want to challenge you slightly because the Swiss rallied on Friday. So if I pivot to, you're long dollar, you want to be long yen, or you want to be long of Swiss. The Swiss behaved as it should do. In a climate of a pause from the Swiss National Bank, it managed to rally. My question to you is, you've upped your target to 94 on dollar Swiss by the end of the year. Given the level of unknowns in the geopolitical arena, do you reappraise that? Do you think that the Swiss can re-anchor itself as perhaps more of a haven relative to dollar?
I would say no, in the context that certainly with the dollar, you've got much higher levels of front-end carry and indeed back-end carry as well. And that's obviously more supportive for the dollar than the franc. We've got the SNB, which is effectively stating that it's on hold. And I think from a structural perspective, I think the important thing for the SNB is that it's stated that of its inflation, it's all pretty much domestically generated at the moment. Previously, they said it was externally generated. And what that means is that the SNB can take a step back from these heavy interventions they've been undertaking, basically selling the dollar and buying the franc. And that would probably reduce, I would say, the scale of any potential franc rally. Technicals are also supportive. You know, we've sort of bounced above the 200 DMA in the last 3 or 4 days. I think that's likely to continue. So overall, where we were in an 85-90 range in dollar Swiss, I think now we're a little bit higher, between 90 and 95 coming into year end.
Now, another forecast you've readjusted is your one for the euro. You're just above parity for year end. We have seen the calls for parity really start to reaccelerate. How much of that is, again, what we're talking about, the dollar strength versus a Europe-specific story?
Okay. Certainly the dollar leg we've discussed.
Right.
On the euro side, look, we're seeing negative data. That's very, very clear. And certainly if we look at the ECB's last rate hike, the markets interpreted that as being a policy mistake, which I agree. And additionally, if we look at euro, in an environment of higher geopolitical risk, but also higher oil prices, that deteriorates the Eurozone's trade account. So, look, my year-end target on euro-dollar around 102. Is parity possible? It definitely is. I don't think we're going to see 95 as we did last year, just on the basis that sort of gas prices are much more stable than they were. But a move towards parity is a possibility. It's not my base case scenario.
You also warn on the terms of trade in regards to Europe, and you talk about a dissipation of that. Given that your base case now is a policy mistake, so we're in a live policy mistake, we're in a Trichet moment, to coin a phrase. What does that mean for, I know, battle that if you can. What does that mean for 2024? Does that mean perhaps faster and more aggressive rate cuts than we are presuming?
I would say vis-a-vis policy mistakes, it always seems to happen when we have French ECB governors.
An Irishman having a go at the French.
Fighting words.
Yeah, that's fighting words at a rugby weekend, kid. Go on.
Indeed. We're both lost. Vis-a-vis the policy mistake, look, what's actually happened is that the market is certainly priced in earlier than expected rate cuts. And if you look at the overnight index swaps, I think they're pricing in the first rate cut probably by June of next year. So whereas previously it was a bit longer. So it more or less indicates that they seem to think that this was just a bit too much too soon from the ECB. We'll have to see how the growth data develops, but certainly I wouldn't anticipate a cut anytime soon, certainly at least in the next 1 or 2 quarters.
Can I ask why this is a policy mistake? Because there are plenty of people who said, look, one extra hike isn't going to break things. So why is it a policy mistake?
Well, they said that in 2008, and they also said it in 2011, and it did turn out to be just a bit too much. Given that we are seeing global disinflation, as a previous guest noted, we are seeing, negative Chinese PPI. We're seeing sort of, in the US, shelter effects coming off. We're going to be in an era of falling inflation. So hiking now just seems a little bit too much, I would say, and possibly it's on the growth perspective, it's looking pretty poor in the Eurozone, let's face it.
So what if oil makes it to $150? What does that do to your theory of disinflation?
I think we'll have to revisit our models and see where we're going.
But, okay, perhaps I'm being unfair by throwing $150 at you. The reason why I do is because Danny mentioned it, and we've looked at it. Zia Dudes run the numbers on a deep escalation risk.
Sure.
There's a risk of $150 in a global recession. So I should put some context around it. But we are one breath away, Peter, away from $100 oil. Does that shift any of your FX thinking?
Well, it would do in the context that certainly if we saw higher oil, it basically means that you're likely to see growth surprises, negative growth surprises, particularly for oil importers and energy importers. That's obviously very, very bad news for the Eurozone, to a lesser extent for China as well. I would say it's relatively sanguine environment for the dollar, given that they're just a small net energy exporter. But again, the dollar will do perfectly well in that environment because it's got very high carry. At the margin, it's probably bad news for certain of the high beta currencies, Swedish krona, sterling to a lesser extent. But again, pretty good news for the energy exporters, right, as usual. So it's again this bifurcated regime, which we would see. The only thing is, and I think it's important to note, is that if we were to see such a spike, it probably wouldn't be that long-lived, right? Which would, I think, sort of truncate any of these longer-term effects.
Peter, we've run out of time for the other 150, and that's $150 yen. So you're off the hook for this time. Come join us. Come join us when it goes through the level, because I know you think it's happening soon. I mean, certainly looks like it is. Peter, thank you very much. That's Peter Kinsella of Union Bancaire Privée. Now, coming up, President Biden is weighing a trip to Israel with Anthony Blinken for the second time, adding to the U.S. diplomatic push. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
London will stay a financial center. It will stay our EMEA hub. We'll just have a rebalancing onto the continent. And actually, the numbers of who has moved across aren't that big. So it's sort of in the 200 level. And if you think about 15,000 people, that's sort of not that material. And so I do think both will basically continue to grow and continue to be very relevant. What will change, though, and the big thing that's changing, is actually the risk-taking is what's going to move. And so we've historically had risk-taking in the UK. That risk-taking and the assets that go with it, not the people alone, but the assets that go with it, that's the next phase of what we're now moving into. And that will be a material change.
heart of global finance, economics and politics, and wherever newsmakers are moving markets. Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacroix, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
Bloomberg.
We work around the clock. Teamwork with the united front. The unity within us conveys a clear message to the people, the enemy, and the world. If Hamas thought we would fall apart, then no. We will tear Hamas apart.
That was the Israeli Prime Minister Benjamin Netanyahu speaking as the US and its allies ratchet up the efforts to prevent a war between Israel and Hamas from engulfing the wider region. And therein lies the point. Bobby Ghosh is our Bloomberg opinion editor and columnist. You've had a busy weekend, Bobby. Good to see you this morning. We're using the word back channels. It's everywhere in every story. But this is juxtaposed. We're readying with 300,000 troops on the border of Gaza to launch a ground assault, and yet we are focused on the back channels. What kind of back channel and who's going to be the strongest back channel that can really de-escalate this situation?
Well, the United States is the obvious channel to the Israelis, and it's not a back channel, it's up front. The President of the United States is openly stating what he'd like to see. The question is, who's the back channel to Hamas? There are several candidates. Qatar has traditionally played that role to try and get hostages out. Egypt is the neighbor that has always played a role in crises like this. Turkey is an important player. A lot of the Hamas leadership lives in Turkey. The Turkish President Erdogan has close relations with them. He has been on record to say this is not a terrorist group, this is a resistance group. That gives him the ability to talk to them. We know what's going on in the conversation with the Israelis because it is happening in the open. We know much less about what's going on in the conversation with Hamas. We also don't know whether Hamas is interested in listening to any conversation, back channel or up front.
To the point, Bobby, and good morning to you, Danny here in London, of Egypt. We did have President Biden speaking on 60 Minutes saying that Egypt should be getting more women and children out of the conflict zone. How realistic is it for Egypt to play that humanitarian part in this?
Well, Egypt has traditionally taken the view that they want to help, but they don't want refugees. The argument has been twofold. One is that allowing refugees into Egypt would create a security risk for Egypt itself. And secondly, and this is a view taken by several Arab states, that if Palestinians leave Gaza, then that lets Israel off the hook. If the Palestinians sort of become refugees once again, then Israel is not under any pressure to solve the Palestinian issue. It's a little self-serving from Egypt's point of view, but that has been consistently their view. We'll help, we'll try to send humanitarian aid in, but we don't want Palestinian refugees on our soil. So for President Biden to persuade President Sisi to allow refugees, that's a very, very heavy lift. That Egypt would have to go against decades of their policy.
But then you have the continuation of a nation of Palestinians trapped. And James Cleverly, the UK Foreign Secretary, said it's in Israel's interest to avoid civilian casualties, Palestinian casualties, because Hamas clearly wants to turn this into a wider conflict. So if the conduit out is not via the south into Egypt, as that's contentious, and there are corridors to the north, what is an off-ramp? What can really help the Palestinian people?
Well, this is the tragedy of the Palestinian people. They've got no place to go and nobody wants them, which is why they get stuck in that little strip of Gaza. The doors are supposed to open for foreign nationals to leave Gaza. Hamas has agreed for that to happen. Yep. I worry that we will see a repetition of the scenes, remember, from the airport in Kabul when the United States was pulling out the enormous jam of people trying to get out at the same time. I worry that other Palestinians, those who don't have foreign passports,
just
will
before
try to get out.
Danny comes in, just clarify for us what kind of size and scale of numbers could that be that leave Palestine? That's a tiny number, Bobby.
Of the foreigners,
Of the
yes,
foreigners,
just scores. But behind them are tens of thousands of Palestinians who want to get out.
And Bobby, I mean, this does speak to sort of the longer-term picture, too, of what is the goal, what is the outcome, what happens after a ground invasion. Manis and I were talking about this earlier, that the idea in the U.S. after 9/11, that long-term goal wasn't really there. Do you see anything of that sort for what's happening in Gaza right now?
No, not at all, and that is a matter of great concern. Our news colleagues have been reporting over the weekend that this is a concern for the White House as well. The U.S., in its conversations with Israel, is not seeing a plan for what happens afterwards. President Biden has been saying, don't occupy Gaza, don't reoccupy Gaza. And there are some in Israel who are saying that's a bad idea. But right now, I think the blood is up in Israel, and the events of the previous weekend are still very strong. Images and videos that are still emerging from what happened when Hamas launched that terrorist attack. So there's a strong and fierce determination for vengeance among Israelis, which is completely understandable. And in the heat of the moment, as far as we can tell, nobody's thinking of what happens after the troops have entered Gaza and after they have engaged with Hamas in street-to-street battle.
Well, of course, the U.S. has a lot of history to reference itself, from Saddam Hussein, the toppling of Saddam Hussein, and what happened there, and as it were, no clear end game in sight. Biden, it is understood. I mean, Blinken will make a stop off and emerge. He's just on the whirlwind tour of the Middle East. Yes. Let's see what comes from that. What does Biden, I don't mean get from going to Israel, but do you think it would be wiser to go before a ground assault by Israel? When is the optimal time for Biden to go? What can be achieved from that?
Well, there are two optimal moments. One is to go before and stop it, if at all that's possible.
Is that reality?
I don't think it is.
Okay.
The second is to wait a little bit until the ground offensive has begun, and then go in and try to sort of persuade Bibi not to go in too hard and to sort of show restraint. It's a difficult call, and I think that's why there's still, the White House doesn't seem 100% certain. They're saying that the president may go in the coming days. We're not yet hearing of a firm date. The president would like to show support to Israel. Yep. That's obviously a high priority. But he also needs to show the wider world that the United States can play a role here in trying to minimize the humanitarian catastrophe that is sort of unfolding before our eyes.
Very clearly unfolding before our eyes. Bobby, thank you very much for getting up early this morning. That is Bobby Ghosh of Bloomberg Opinion. Coming up on the show with Danny and I, we're going to take a look at some of the market-moving events for the week. Quick check on how markets look at the moment. You've got the S&P 500. It's a big week for earnings on the tech front. Let's see what those interest rates do to that. The dollar's on the back foot this morning as we use this phrase, back-channeling and trying to find back channels for the Israel-Hamas conflict. And yields rise after delivering the hedge of hedges last week in this geopolitical angst across the world, right here on Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader. Yes. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot. You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
How did Jeff Bezos realize you could sell anything on the internet?
The web was growing at something like 2,300% a year. Anything growing that fast is gonna be big.
Why did Bill Gates create Control-Alt-Delete?
Kind of become the poster child of, hey, couldn't you have made this stuff a little simpler?
And what inspired Diane von Furstenberg to create the wrap dress?
The wrap dress created me.
On the David Rubenstein Show, I uncover the untold stories of the world's most successful leaders, right here on Bloomberg.
This is Bloomberg Brief. I'm Danny Berger in London with Manish Cranny in New York. Now let's get you set up for the week and a look at what is ahead. Earnings season is going to be ramping up. We get quarterly results from Goldman Sachs, Bank of America, Morgan Stanley, alongside Tesla and Netflix. Now on the eco front, we're going to be getting key data out of China. That includes GDP growth, as well as UK inflation and US retail sales data. Then on Thursday, Fed Chair Jerome Powell is set to deliver remarks on the US outlook and monetary policy at the Economic Club of New York. Now, Manus, a lot of the chatter we've heard from Fed officials has been this idea that the market is doing a lot of work for us. We also heard from Harker last week to end the week saying that the disinflation trend is here. Will Powell also echo those comments?
Well, this is his opportunity really to clarify that the higher for longer, you know, there are now new global risks, aren't there, in terms of Israel, Hamas. The Michigan survey, you mentioned it just over an hour ago, inflation expectations are at a 5-month high. So that reality check for the bond market, I think that's what you're seeing this morning. Yields trade higher by 6-7 basis points at the last check. And in many ways, that is because you had that massive hedge that got put on last week in the eye of the geopolitical storm. But of course, staying with the Middle East, Danny, there is one other stock which is being bruised this morning. Manchester United. Looks like the Qataris have finally thrown in the towel to Mr. Ratcliffe over in the United Kingdom and walked away. I just wonder whether they really, you know, they'd just gone at this for a year, hadn't they? Manchester United, Jim Ratcliffe and the Qataris.
You're right, and part of this was that the Glazer family really wanted $6 billion for this club. It didn't seem like the Qataris were going that high. So what you get with Radcliffe is a different restructuring of this deal, where maybe even the Glazers are able to retain some. Manus, I've said this before, the Americans are coming for British football, and they won't even leave. They won't even get rid of it, the ones who are already here.
Yeah, but you've not got your British passport, so technically...
True.
Technically, yeah. Ms. Berger, you're actually British. Well, actually, I've got both passports, so I'm grand. It just depends on the day which nationality, but I'm firmly on my Irish passport these days. Let's talk about Pfizer, because it's dipping as well. They're slashing, you know, they've slashed their revenue and their earnings forecasts for the year after agreeing to take what, you know, a number of different hits on a number of different fronts, haven't they?
Yeah, they really have. Some of this has to do with taking doses of a certain medicine back from the U.S. government. But, Manus, it's worthwhile taking a pause here and look at what's happening in this bond market, because that Haven bid, it does seem to be abating somewhat. You have yields moving higher, 10-year yield by 7 basis points.
Yep. So last week it dropped by, 19 basis points on the longer end of the curve. So the pernicious, my favorite word of the last 10 days, inflation is the risk. Bloomberg Brief does it for Monday. Surveillance is up next, right here on Bloomberg.
what do you consider to be the biggest challenge?
Infrastructure that supports trade is the biggest challenge. Our senior brother, President Adesina of the AFDB, estimates the annual deficit, infrastructure deficit in Africa to be over $100 billion. But that over $100 billion is actually also an opportunity for investment. So it is a massive, significant challenge that we are confronting. And my fear is that we may succeed in establishing a very effective legal construct and a very effective legal foundation for trade liberalization and investment liberalization in Africa. But all of that will come to naught if the infrastructure deficit is not addressed, because you will need the goods to move somehow, and you will need to have good trade corridor connectivity, ports, trade corridors that connect countries that are landlocked to the ports.
Fiscal policy is out of control. Monetary policy has actually been doing its job.
When we see the Fed raise interest rates, the economy tends to evolve in a very similar level.
I think a lack of a move higher in rates is enough to give some relief to equities.
I think for the bond market, it's really what happens in investment grade that's so critical.
Treasuries are going to trade much more in line with fundamentals over time. This might be the beginning of a secular bear market.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Let's get your working week started. Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Your equity market this Monday morning on the S&P positive by 0.2%. The tension over the weekend, Tom, it felt like we were on the brink of a full ground invasion all weekend.
We're all doing it. We're looking at our phones, going tick by tick here. I'm using the live services of all the different news sites, and it just migrates forward, waiting for what? And you can see the politicians, I thought most interesting, jockeying here to keep their options open. You wonder I don't know what the options are for the people of Gaza. We'll have to see how that unfolds today.
We were all attempting to follow this war through the weekend. The IDF attacking targets around the northern part of Gaza, rockets fired at Tel Aviv and southern Israel as well. What we've been learning over the last 24 hours or so, Lisa, back-channel talks between the United States and Iran.
And there was a sort of feeling of frantic kind of diplomatic relations. The idea of Iran, who doesn't have any formal relation with the U.S., having back-channel talks, also having back-channel talks in some capacity with Israel, highlights how no one really wants this to percolate out of control, and yet the pressures just keep building, and no one can come to any resolution at a time where there still are hostages, there still are strikes, there's still a lot of people dying.
There were pressures at the IMF meeting, and I thought the most salient thing is Managing Director Georgieva gave a lengthy statement on Israel and the Gaza Strip. John, she simply said, all we have to watch is the price of oil. And is that really where we are this morning?
That's been somewhat contained so far, purely from an investor's perspective, Tom. Will this conflict remain localized? Yeah. That seems to be the question on everyone's lips over the weekend and into a new trading week.
And I go north again. We talked about this. Lisa, I thought was great on it before we left, the triangulation here of not only Gaza Strip, but then over to the northeast to the West Bank towards Jordan and then up to Lebanon. And it was clearly a fractious Sunday in the north of Israel.
To your point about oil prices and how markets have been rather callous and sort of looking past it, a lot of the notes over the weekend were saying absolutely geopolitical risk and the potential for a broader conflagration is not being priced in anywhere in markets. But how does a market price in something where there are so many variables and where there's such frantic efforts to prevent the worst case scenario? Markets are just sort of tentative, and that's the kind of nervousness you can feel under the hood.
Brent crude right now, $90 and about 80 cents. WTI, 87. 84. Let's whip through the price action on the S&P 500. Equity futures shaping up as follows. Positive here by 0.1% in the bond market. Another sizable move. I think we just have to get used to this now. A 10-year yield. Bramo moving 8 basis points higher. Your yield right now, 469.14.
I think that was exactly my conclusion this morning when I walked in and I saw, oh, look, it's bouncing the other way. This way, perhaps we'll get some sense of what all of the Fed officials think of it. Just to give you a sense, there, I think, are 14 speeches. I believe 7 individual Fed speakers capped by Fed Chair Jay Powell on Thursday at the New York Economic Club. We'll also hear from Philly Fed President Patrick Harker, New York Fed's John Williams, Richmond Fed President Tom Barkin, Chicago Fed President Austin Goolsbee, Atlanta Fed President Raphael Bostic, and Dallas Fed President Lori Logan before the quiet period next week. Earnings, Bank of America and Goldman Sachs on Tuesday, Morgan Stanley, Netflix, and Tesla on Wednesday. It's really all going to come down to the parlor game of who's winning, Goldman Sachs or Morgan Stanley. So far year to date, Morgan Stanley's lost less than Goldman Sachs, but both facing struggles. And on the economic data front, I actually think this might be really important, the sleeper data of U.S. retail sales.
Yep.
Also housing starts, the beige book, which Tom reads from front to back, and jobless claims and existing home sales.
I think the retail sales is important to frame out, is it a recession or is it something above a recession? And the answer is, what I noticed, John, is the strategist toning up a better earnings season than expected. And I wonder how much of that comes from an American consumer, 70% of GDP, OMG, actually doing better.
You mentioned the IMF World Bank annual meetings in Marrakesh, Morocco. Let's talk about what wasn't discussed. Why weren't they talking about the bond market, deficits, what's been taking place in treasuries? I heard it like once with Gita Gopinath on your panel.
Yeah.
That was basically it.
Well, Joyce Chang saved the day as well from JP Morgan. They have a food court. You go down the beautiful awning and the wood things. They call it the food court. I call it the student union. It's no different than the student union when we were hungover juniors, trying to figure out if we had the energy for the 10 a.m. And you're in there and there's nobody talking about the bond market. And yet everybody's glued to their phones looking at the bond market.
Doesn't really make sense,
It doesn't make sense. It was the great, and this has happened at Davos, too. There's something always unspoken. Seriously, people were riveted by the tensions of the war in the Eastern Mediterranean, and you could feel that in the airspace of Morocco. But, John, I'm telling you right now, the bond market was the huge unspoken there.
Well, it's great to have you back, Tom. Welcome back, sir. Joining us now is George Goncalves, the head of US macro strategy at MUFG. George, let's talk about that bond market from a very specific angle. Does this budget deficit curtail America's ability to respond, support military escalation on multiple fronts?
Look, when you're already running wartime deficits before a major escalation or a bigger conflict in multiple fronts, it does make it more challenging. But it's not impossible. I mean, I think that their mobilization of resources would take place and prioritization would take place as well, and maybe cutbacks on domestic spending. But yeah, the real question is, can the bond market handle it, and what does it mean for the level of rates? I mean, the bonds get issued, but then it really comes down to the spillover effect and the crowding out of other credit markets. So the treasury market will always get funded, higher rates, no less, but it will take away money from somewhere else.
Well, there is this larger question, George, and I think that you raise it well, which is it's going to take money from somewhere else. Are you talking about that on an investment thesis or on a fiscal thesis, right? Because we're wondering, to John's point, whether this is going to curtail the ability of the U.S. to intervene with the geopolitics globally. From what you were saying, the answer is probably no. What does that disrupt in the market that people are not counting on?
I mean, look, we've had a pretty big, large increase of mostly T-bills and short-term funding to kind of get us back to where we needed to be post the debt ceiling back in early June. But now we really had to term out the debt. So as we're terming out the debt, I think that you're going to see a combination of more T-bills to a certain level, but I think that just more long-term debt, and therefore that's going to start to really hit the corporate sector and housing.
This morning we saw Rite Aid, or last night, file for Chapter 11 bankruptcy in part because of their debt overhang. Is this the beginning, just to sort of follow on to this point, if you're going to see it in other areas, is this the beginning of some cascade of something larger within the corporate space as the fiscal space kind of deals with its own demons?
Look, I think it's going to really expose the have and have-nots and those that have access to liquidity and capital in the marketplace. And so, yeah, I mean, I think it is the beginning. I mean, we have to remember the average 10-year rate is somewhere around 3.2 on a 2-year look back. So over the last 2 years, we've gotten the 10-year back to about 3.2, which is where we were in 2011. So we really haven't made a lot of progress. And so if you think about if we're going to really see a Fed higher for longer, and let's say that rates are between 4.5 to 5.5. And corporate America is not ready for that.
George, frame out the real rate. That was, not on stage, but, in the corridors on the desert of Morocco when I was on my camel trips. That's what we were talking about. A 10-year real yield. Frame out your call on a 24-month 10-year real yield.
Look, I think that the real yield will stay higher and elevated, but it's also having this kind of pull effect on both the dollar as well as term premium. And there's multiple channels working here. You also have global rates in general rising as well, and that's taking away some of the capital they used to come back to the U.S. And even look at last week, the flight to quality bid into treasuries really fizzled really quickly. So the fact that that's all taking place at a time of all these large deficits means that real rates have to stay high, and probably 175 to 250 on the 10-year is probably fair game.
What does that do to the American economy?
Again, it's the cost of capital ultimately, right? And so if that is what exposes the companies that can't really make their interest servicing costs, I think that's what's going to get exposed in the next 18 months.
Is the Fed part of the game anymore, George? Just seems like they're taking a back seat over the last week.
Look, I think our view is that they're probably done. They're going to try to probably stretch the debate into early 2024 with the, hang the risk that they could also hike next year if inflation were to get out of control. But given that inflation kind of trends in a certain direction, especially core, I think that they're probably done, and they're going to have to shift their focus from all about hikes, but more about the neutral rate. What is neutral? And they're going to have to really make that case clear that they're not going to go back to zero rates. And I think they have to really hold their ground on that front.
Elisa went through the week ahead. Chairman Powell, Thursday, Economic Club in New York with our good friend and colleague, David Westin. We're all looking forward to that conversation, George. If you had a question for him right now, what would it be?
I guess, look, we've seen Chair Powell over the last couple of years pick and choose, certain indicators that he prefers. He went from jolts, and then of course he went, super core is really a Chair Powell fabrication. And so I'm wondering, does the super core still matter for him? It was high last week, as you guys know, at 0.6. Does that force them to kind of keep going?
A lot of people are wondering how fragile the market is as well, especially as we face a geopolitical risk. What a lot of people are saying is unlike anything we've seen in the past 50 years. George, how fragile is the market at a time where nobody can really price in how a conflict will escalate that seems to be right now sort of kept under control by frantic discussions and barely kept in control at that?
Look, I think this whole year has been a year of a market that's been on its toes and on edge. This uncertainty does not help at all. We're heading into the time of the year where liquidity is less. It's been a choppy market. Even though risk markets have done well, they can give back those gains in a heartbeat. And I think that's what people are nervous about and looking to get insurance and get more defensive in case things get worse.
George, is there value in studying a 5-year duration to come into the near side of the belly of the curve?
That's a great point, Tom. I actually think that the sweet spot, especially if you look at what's going on with the tips and real rates, the sweet spot probably is the 5-year part of the curve. I do think that that's probably going to be where you can kind of have some comfort. Doesn't mean you won't suffer losses as rates rise or stay elevated, but I think over time you're going to make up for it. Especially if we're going to have probably have a second impulse or third impulse of inflation 2 or 3 years down the ride.
The basic idea we're summing up on a Monday morning is higher for longer. Everybody's writing about it. Everybody's thinking about it. What happens to the disinflationistas, people really looking for a drive lower in rates off of a disinflation vector?
Look, I think that's not completely in the back burner. I do think that we're probably going to see slowdown. Because of the hikes themselves and the contraction of credit and the impact that it's going to have on corporate America and eventually jobs. So we're going to see some disinflationary pressures, but it's not going to be enough to bring us back to levels where it would warrant zero rate policy in QE. And therefore, it's hard to have a big rally in the bond market.
George, thank you, sir, for being with us. George Goncalves there of MUFG. What a week we've got coming up. Chairman Powell on Thursday, retail sales a little bit later this week. Bear with me. As Lisa mentioned, we're about to go into the quiet period this weekend for the Federal Reserve's next decision in early November. Here's some of the Fed speak. Harker, Williams, Bowman, Barkin, Kashkari, Waller, Williams, Bowman, Barkin, Beigeberg, Harker, Cook. That gets you through Wednesday. That's not even.
Could you do it again? I was dancing.
I know, he's just.
It's got a beat to it.
Absolutely.
Do it again.
Insane. How much is the Fed going to speak through this week? It's nuts.
You know where I stand on this. You're just busting my chops here. I think there's a crescendo of understanding that there's too much Fed speak. And that's all there is to it. Everybody's got their favorites. I get it. I thought Mary Daly was, with you, Lisa, was just lights out. But come on. I mean, what I want to know is, are they comparing notes, you know?
Okay, look, I think that everybody complains that they speak too much, and then they listen and they parse through everything that they say for some guidance in some sense that maybe they know something that we don't know, and that maybe it can help guide things in a very uncertain moment. So, you know, on one hand, you could say they speak too much. On the other hand, people are looking for guidance. The fact that they don't get it, maybe they're just frustrated that they're not getting some sort of oracle from people who don't have a better crystal ball than we do.
Goresby, Bar, Bostic, Harker, Logan, Harker, Mester. That's the rest of the week, by the way. Throw in some Powell as well, if you need
Sounds
it.
like a Billy Joel song. Remember the Billy Joel song?
A lot of Harker. Harker's
to go back to what Mary Daly, the San Francisco Fed, said to Lisa a couple of weeks back, I think that conversation, Bramo, really set the tone for the broader conversation going into the November meeting, which is we'll allow the bond market to do the work for us, which is why a lot of people just assume November's off the table. If Chairman Powell wants to change that this Thursday, it's the last opportunity to going into the quiet period.
Since when has he ever ruffled feathers when he doesn't have to, right? Unless it's a mistake. I will just say also ECB officials have taken a similar tone. It seems to be the easiest pass.
Right. John,
yeah, go ahead.
I love it. You got to go to the moon.
Dancing.
Harry Truman, Doris Day, Red China, Johnny Ray, South Pacific, Walter Winchell, Joe DiMaggio, Joe McCarthy, etc.
Wait, what?
You have no idea what I feel so old right now.
Is this REM song?
Oh, guys, help me here. Email in.
Not American Pie, really? No,
what was that?
We didn't start the fire. William Joel.
Oh, William Joel.
Yeah, it's like when you were doing the
I'm pleased you rested. I'm pleased you rested. From New York City, this is Bloomberg.
London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening. Here's what I'm watching.
You do not want to miss this
Is
story.
there the kind of upside?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything.
Would you support Israeli occupation of Gaza at this point?
I think it'd be a big mistake. Look, what happened in Gaza, in my view, is Hamas and the extreme elements of Hamas don't represent all the Palestinian people. And I think that it would be a mistake for Israel to occupy Gaza again.
The President of the United States speaking on CBS's 60 Minutes over the weekend. The latest reporting here at Bloomberg. Jen Jacobs, Justin Sink. The President of the United States considering a trip to Israel. According to two people familiar with the internal discussions, no decision about whether to travel to Israel has yet been made. But TK, based on our reporting, it's being considered.
I think everybody's stumbling around. I've been in a vacuum here the last number of days, and John, to parachute, you and Lisa have been watching it tick by tick. I have not. And to parachute in, the adjustment for me is just the options people are having against a blunt instrument of war. They're trying to verbal out the different options, the different choices they can make, and it's a huge muddle this morning.
Blinken's been everywhere, Tom. Didn't we call that shuttle diplomacy?
Yeah, I think
going
it's
from
shuttle
place
diplomacy.
to place between countries that don't necessarily speak to each other. And as for Iran, no formal diplomatic channels for the United States to speak to Iran, but the back channels that Jake Sullivan was talking about, the National Security Advisor, you get the feeling they're warning Iran off, Tom,
and I think, from
escalating this conflict.
Particularly media outlets that have an angle here are really looking at whatever their angle is on Iran as being some form of choice set. I don't think that's the choice set right now for America. They're focused on hostages. They're focused on the territory of the Gaza Strip, 2 times the size of Washington, D.C., and frankly, all that we witness. And this is important. Everyone's playing to a domestic audience. I don't think enough is said about that.
Including the president. If you are just joining us, welcome to the program. Your S&P 500 this Monday morning shaping up as follows. Positive here by 0.14% on the S&P. Yields a whole lot higher by 7 basis points, 468.51 on a US 10-year. And in the FX market, Tom, 105.30 on the euro, slightly stronger against the weaker dollar.
We get expertise now, as we've done. Thanks to our team for really going internationally to get this done. Julie Norman is at the University College London UCL Center on U.S. politics, but also is weaned out of a PhD program and truly one of the world's experts on terrorism. Julie, what an honor to speak to you this morning. How is this terrorism? How is this, as the president mentions, narrow stridency of Hamas? How is it different this time?
Yeah, Tom, well, this is a very different tactic than we see from Hamas, obviously, last weekend, and that's why the response that's being considered right now is also expected to be very different in scale, very different in tactic and operation. It also obviously has the end goal of, quote unquote, eliminating Hamas. That's I think going to be a difficult end game that's going to be tactically difficult over these upcoming days, weeks in Gaza. And just on a broader level, also, Hamas has a lot of regional dispersal, and they represent a certain type of resistance. And I think a lot of Israel's choices in these next few days would have a lot of both moral and pragmatic implications in terms of, as we see civilian casualties rise and whatnot, that will in some ways galvanize much of what Hamas's goals have been. And I think there will be many who will step into their place. So it's a very difficult needle to thread right now. I think that's part of why we see Biden maybe considering a trip there into seeing how can Israel respond to this, but also try and avoid just a longer-term security risk.
And to play off one of your papers from a more peaceful time, beyond hunger strikes, the Palestinian prisoners movement, and everyday resistance. Julie, you're as close to an expert on this as we're going to get. How do you perceive a military exercise from north to south in Gaza?
Yeah, so as has been noted many times, Gaza is an extremely difficult place to live, but also to carry out a military operation. We've obviously seen already the evacuation, the movement of upwards of 1 million people from the north to the south, but there's really nowhere for people to go at this point. And so even if the operations stay mostly in the north, we're still looking at a very difficult humanitarian situation really throughout the Strip, as well as just a likely devastation of infrastructure that I think makes an end game very difficult to foresee here. We heard Biden speaking yesterday about trying to preclude a possible reoccupation of Gaza. It's very difficult to see what governing or administration would look like in Gaza after this. Again, most of the civilians who are there are not going to have anywhere to go, and it's going to be very likely a very difficult situation for anyone stepping into that space.
It's been incredibly difficult to understand what's going on, Julie, not only because a lot of the conversations are going on behind back channel discussions, but also because of a vast slew of misinformation intentionally being put out from a number of different sides. I'm wondering from your perspective if you have a better sense of where the red lines are. We heard conflicting reports of Iran not wanting to get involved, then saying as soon as a ground operation starts, they're ready to go in. What have you gleaned over the weekend?
Yeah, well, you're absolutely right, Lisa. There's been a lot of misinformation, and I think all of us should be kind of careful in double checking many of the sources and whatnot. I would say in terms of Iran's movements, that I think will really be the deciding factor into if and when and how this conflict escalates. Iran has much closer ties with Hezbollah to the northern border of Israel than even to Hamas. And I think it's really the question of if they would activate Hezbollah, open up a northern front that would really change the contours of this war and make it a much more of a regional conflict. We are not at that point yet. Obviously, Secretary of State Blinken has been on a massive diplomacy run through the Arab world this week to try and deter Iran or Hezbollah or their proxies from further escalating this. But I think that's not a given, and that's one reason, again, why these conversations are going to keep continuing to see, okay, there's the operation on the ground, but also what can we be doing simultaneously to try and deter other actors, and especially Iran or Hezbollah, from getting involved even further.
It's a tragedy, and we all are seeing the tragedy unfold, a humanitarian tragedy on both Israeli families as well as in Gaza with people fleeing the north. I'm curious why, if we're hearing that there are 100 trucks backed up, ready to deliver humanitarian aid to Gazans that have gone south, why they're not being let through.
Yeah, so my understanding on this is that Israel wants to be able to check any of the trucks that are coming through for security reasons. So they will not give a guarantee that some of those trucks would not potentially be, that they would not be immune from targeting and whatnot. So that's where the impasse seems to be. There is a lot of aid waiting on the other side of the border to come in. There are a lot of people in need waiting to come out. And I think where a lot of Blinken and Biden's conversations with Israel will be is trying to negotiate some kind of opening on that border to allow that passage.
Professor Norman, we're all falling back on our memories on this and our knowledge. If you look at the present day horror, and you look at Albert Harani's History of the Arabs People, or Fromkin's A Peace to End All Peace, are we now beyond the chain and linkage out of World War II of the Levant? Are we onto something new here?
I think we are, Tom, and this has been obviously coming for a while. This is a broader regional question. I think the Arab uprisings, the Arab Spring that we saw 10 years ago, many thought that would be a new direction. Those went a slightly different direction than many hoped or thought they would. But we are seeing now, I think, is a resetting. And again, a lot of this is in a context of, steps forward and steps back. I think there was a lot of hope this year around some normalization between Arab states and Israel, and many see this attack as trying to be a spoiler to that, which it obviously has been. So there's been again a lot of shifts in this region, and I think this war will be very definitive of where the region goes after this.
Judy Norman of UCL. Judy, thank you as always. New poll, CNN, last 24 hours. Ahead of Israel's expected ground invasion of Gaza, most respondents, this is Americans, said the Israeli government's military response to the Hamas attacks is fully justified, 50%, partially justified, 20%. A total of 21% said they weren't sure. 8% said it's not justified at all. I think this is really important, Tom, to put out there, because what you see over the last week, lots of controversial stories about what's happening on college campuses in this country, a lack of support for Israel.
Right.
You look at that poll from CNN over the weekend, TK, and I think that speaks emphatically to support from Americans for Israel to the events that are taking place over the last
Everybody
week.
reading that, including the administration. I know Anne-Marie Horton will be in touch with that.
AMH coming up in the next hour. Looking forward to catching up with Anne-Marie down in Washington. Coming up very shortly on this market, Liz Ann Saunders at Charles Schwab just around the corner from New York City. Futures positive by 0.16% from New York. This is Bloomberg.
was putting so much pressure on myself. And when I changed my mindset midway through the tournament and just approached it one game at a time.
Lloyd with Morgan streaking. She's chipping the goalkeeper! Off the post and in! Hat trick for Lloyd!
I went from really just being under the radar to suddenly being in the spotlight.
You know who I'm talking about, Carly Lloyd. Carly Lloyd! Ladies and gentlemen, we have an American hero.
I had speaking engagements, sponsors that wanted to sign me, appearances, you name it, I had it. It became very mentally draining for the next easily couple years because I was extremely busy. But I knew that if I'm going to have any type of retirement, any type of financial stability when I'm done playing, I had to take every advantage of my opportunity.
The top names in business are on Bloomberg.
I see a world where financial conditions have gotten tighter, and the transition mechanism, which the Fed would like to see in slowing down the economy, which we all expected, it's